Good morning, students. Um, I hope you had some clarity on registrations and the session which was taken yesterday as well on the topic of indirect taxes, GST. Um, Today we are moving ahead with a chapter called payment. Okay. So what is payment? Whatever taxes is being collected from the customer, this has to be paid to the government. Okay. Now you cannot keep the money what you have collected in your sales invoice with yourself. You will have to deposit to the government because it is government's money. It's not your money. Okay. The crux of how the GST flows we have seen even in the past chapters. But to recapitulate, you are a registered person. Now you collect taxes from your customer. Now the customer gives to you with the assurance that he will get the credit, and with government has made you the registered person with the responsibility that you will collect the taxes from the customer and pay it to the government's account. So you cannot keep this money with you. You will have to deposit this with the government, right? So if we move, before we move into the technical parts and move on to our slides, I'd like to start with a tongue twister which I want every one of you also to tell. Okay, because there is some relevance of this. The tongue twister goes something like this. She sells seashells on the seashore. She sells, somebody sells, she sells seashells. Seashells are the shells which are there on the sea. And where does she sell it? On the seashore. So repeat this at least 10 times. She sells seashells on the seashore. It should be a little faster. I can't hear you, but I know not everybody is telling this. Seashells on the seashore. She sells 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 seashells on the seashore. Don't get twisted and then she sells seashells. Tell she sells seashells on the seashore. She sells seashells on the seashore. She sells seashells on the seashore. I hope everybody has told it clearly. Why I have told this is we have something called a tongue twister kind of words in our present chapter. It is called electronic cash ledger, electronic credit ledger, and electronic liability register. So this will open up your pronunciations and you will not get tangled with the words. That's the reason I've told this, that you use this tongue twister and clear your tangled tongue so that you can pronounce the terms correctly. Electronic cash ledger, electronic credit ledger, and electronic liability. Liability is not a ledger, so it's called electronic liability register. Okay, so we move ahead. All of you are ready. What will we cover today is payment of tax, interest, penalty, and other amounts as given in section 49. Okay, section 49 says whatever taxes you have collected you have to pay, and okay, and how do you pay that? What are the modes of payment apart from taxes? What are the other amounts which you have to pay? And section 49 also describes maintenance of 3 ledgers, and these are called electronic ledgers because you do not have to maintain it in your normal thing, in your normal books of accounts. You can maintain it for your clarity, because when you make payment, you also will have debit credit of the tax payment, debit credit of the credit utilized, then offsetting of the credit with the taxes. We have learned all of this in the ITC, right? Input tax credit chapter. So this ledgers are maintained electronically at the portal. So each person will have a GST in login, and when you log in onto your GST portal, you will have a dashboard. In the dashboard, you will have option to select the ledgers. In these ledgers, you have 3 ledgers: the electronic credit ledger, electronic cash ledger, and electronic liability register. Who authorizes these registers is given in section 49. Then you have section 49A, which is utilization of the ITC, and 49B is order of utilization of credit. This 49A and 49B are a part of the utilization itself. So when we do the utilization of the credit, on what basis we can utilize, that will get covered under section 49A and 49B. Then you have once taxes has been paid. Now, if there is a delay in payment of taxes, okay, you're supposed to pay the taxes by the 20th. Okay, we'll read the dates again on the returns chapter, but to understand clearly, there are two dates which are important in terms of return compliances here. By 10th, you have to upload something called as a GSTR1. This is the return of all your outward supplies. GSTR1 is the return for your outward supplies, and the return of your summary of your sales less purchases, and you're reducing your input tax credit, net payment, how you should make, what you should make, goes in a return called return GS form GSTR3B. Okay, form GSTR3B, which has to be filed on the 20th of the subsequent month. So 10th is the due date for filing GSTR1, which is a return of all your outward supplies, and GSTR3B is the return, summary return of your sales and purchases and tax payment. So if you don't pay your taxes, the taxes has to be paid with the returns. If you don't pay the taxes, the returns does not get filed. So if you don't pay your taxes and file your returns by the 20th, if you delay it, then there is a interest component which is defined in section 50. Then section 53 talks about transfer of input tax credit. What is this transfer of input tax credit? It is not you have to transfer to somebody or somebody will not transfer to you. This is transferred by the government authorities at their end. How central will transfer credit to the state, how the state transfers credit to the center, we will read and understand in section 53. Then 53A is transfer of certain amount. This is an amended provision, and you will see in the past also in the sections what we have seen here. 49 is a section. Then why did 49A come? Why did 49B come? They could have directly gone to 50, right? What could be the reason for 49A and 49B? Can you give me answers in the question panel? What is this 49A, 49B, 53A? When they had option of next section 49, 50, 51, what could be the reason this A, B, C comes in between? Could you please answer in the question panel? One of the students has asked a question. So the due date of GSTR1, you have said 10th, but I'm confused. When I go to my office, they say it is 11th. Yes, my dear. 11th is the due date, which is the extended due date for the present period, but the relevant date for your examination, because the period when those was there, it was always 10th. So for all practical purposes, for your exam, it is 10th, but post March, the due dates, because the government has the power to notify extension of due dates. So they have extended as 11th for quite some period of time, but the act and the relevant dates for you is 10th for GSTR1 and 20th for GSTR3B. Of course, the dates of GSTR3B also has got extended during the pandemic period, but all of those is not relevant for you. The relevant date for you is 10th and 20th. Correct. So one person has replied correctly saying that these are the amendments. This means that the initial law, when it came, these sections were not there. The 49A, 49B, 53A were not there. The A and B refers that there were a section called 49. Then they had to amend that section or add a section. So these are the sections which got added on later on. So 49A, 49B got inserted by the Finance Act 2019, and 53A also got inserted by the Finance Act 2019. So once it gets inserted, then you get to know that yes, these are the amended sections. Yes, yes, all your answers are correct. We have which ITC, which we have whole, somebody asked a question, we have whole ITC which needs to be adjusted against IGST, CGST, SGST. That's why we have different sections. We have different sections because the utilization of all the credits is given in section 49 itself, because 49 itself has all the three ledgers: electronic cash ledger, electronic credit ledger, and electronic liability ledger. But there is no separate sections for other utilizations. 49A and 49B gives utilization because there was some confusion on how to utilize the credit. It used to happen that I used to utilize only IGST, then other credit used to get logged. That's the reason the government said we will bring up this amendment so that it gives better utilization procedure for the taxpayers. Okay, and the answers that we have different utilization for IGST, CGST, SGST, that is not correct, because each law will have these provisions, right? This section 49, 49A, 49B is there in CGST law. Similarly, these sections are there in SGST law. So SGST law will give the mechanism for set off of SGST credit, and 49A, 49 will give utilization for these electronic cash ledger and the utilization of IGST, CGST and SGST. So utilization part is given in section 49 itself. There was no need for 49A. 49A and 49B is to clear the confusion and bring more transparency to the taxpayers. Okay. And transfer of certain amount, section 53A is talking about a provision where the government is allowing to offset or adjust your tax balance from one minor ledger to another minor ledger, or from if you have paid taxes wrongly under CGST instead of paying IGST, you were not allowed to utilize the amount what is lying in CGST. I'm talking about electronic cash ledger. We will discuss this in further, but I'm just giving you a brief here to understand. If you have made deposit of tax, okay, when you make payment, you have to select the category under which you are making payment, whether it is CGST, SGST or IGST. Now you have a liability of IGST, you had to pay under IGST ledger, but you have wrongly paid under CGST ledger. Earlier, there was no option of moving this from the IGST ledger to the CGST ledger, but now this is permitted, and how that is permitted and what is the implication is given in section 53A. Okay. Now we'll move to the basics. Liability on supply is determined on the monthly return, which is presently the GSTR 3B. The earlier provisions used to tell what is something called as very simple returns called GSTR 1, 2, 3, but unfortunately GSTR 2 and 3 are not implemented because of the technical glitches. We have only GSTR 1, and instead of GSTR 3, which was the primary return, is got substituted by GSTR 3B. Okay, GSTR 3B is practically the monthly returns for filing the monthly returns. And payment is made through different sections. Payment is the section 49. Liability is not paid completely in cash. Now, if you have a sales made, okay, and you have a sale of 1 lakh rupees on which tax is 18,000 rupees at 18% rate. Now, will you pay this 18% rate that for completely to the government? No, because you have something called as a credit lying in your ledger. You will utilize the credit and then make the payment. So liability is determined from your sales, but the payment can be made through two ways, from your credit balance and from your cash balance. Use the credit balance to the extent possible, then whatever is the pending amount you pay from your cash. The provisions of CGST are made applicable to IGST. This section is very important in terms of which are the provisions which are there in CGST Act. Why should it be repeated in IGST Act? So IGST Act has one section called section 20, which says that subject to the provisions of this act. Which act? IGST Act. I am reading section 20 of the IGST Act. It says subject to the provisions of this act, the IGST Act, and the rules made there under the IGST Act, the provisions of CGST, Central Goods and Service Tax relating to. So there are various clauses that says what are all the provisions which are there in CGST is applicable to IGST. So provisions of Central Goods and Service Tax Act relating to payment is one clause there. Relating to payment shall mutatis mutandis apply so far as may be in relation to the integrated tax as they apply in relation to the central tax as if they are enacted under this act. So what does it say? The provisions of payment, what is there in CGST Act shall apply to the IGST Act mutatis mutandis, which means to the extent of the corrections. So payment, if the payment has to be made by the 20th under the CGST Act, then even under the IGST Act, it has to be made by the 20th. So there is no separate section-wise details repetition of the CGST Act under the IGST Act. The Section 20 empowers the IGST Act itself to borrow the provisions of the Central Goods and Service Tax Act with mutatis mutandis. Mutatis mutandis means with respect to some alterations, some with relevance to the context. So if the CGST Act says 9%, then IGST Act will say 9 plus 9, 18%. So that has the meaning of mutandis mutandis, which has to be read in relation to the IGST Act. Okay. So Section 20 borrows the provisions of payment also from the CGST Act and brings it under the IGST Act. Some questions over here. Person is asking, sir, I am confused now to distribute time of 3 hours between MCQ and descriptive paper and also between GST and income tax. We will get back on the preparation of examination and how do you distribute. Let us understand the technical things here, because IGST gives you 40 marks and these are very simply these are marks which you can score in a better way, because I understand the questions of IGST are more simpler than your Income Tax Act, right? So Income Tax Act has 60 marks, which is a major part of your marks distribution, but 40 marks you should grab it to the maximum extent. Now, we are talking that Section 49 enables 3 ledgers. First is the electronic liability register, which is given in Rule 85. Even though the section you will see it flows as electronic cash ledger first, then electronic credit ledger, and then liability ledger register, but the rules are on a reverse order. Rule 85 says first about electronic liability register. Then Rule 86 is on the electronic credit ledger and Rule 87 is in electronic cash ledger. The electronic liability register is maintained in a particular format which is given in the form GST PMT01. Now, you have separate terms for GST returns, which is called GSTR. Okay, R signifies the returns, GSTR1, GSTR3B. Similarly, there is a different format for payments. That's why it's called PMT01. So electronic liability register is in GST PMT01, electronic credit ledger is in GST PMT02, and electronic cash ledger is in GST PMT05. Now, what are these 3 ledgers? There shall be 3 running electronic ledgers maintained. So you do not have to maintain it. The government will maintain it based on your transactions, your interactions with the portal. It is maintained electronically. That's why this is called as electronic ledgers. First is the electronic liability register, which records all the liabilities of a taxable person. Now, all the liabilities, when I say, it means the liabilities which you have decided in your GST returns. Okay, there is something called as a self-assessment. Okay, now the present GST follows the principles of self-assessment, wherein when you make any sale and when you make any purchases, you yourself will have to declare that in your monthly returns. The government will not come and ask you for every sale purchase, give me the bill immediately, I will approve it and do it. So this is not a license Raj or a different mechanism wherein government will do the assessment for every transaction. This is a self-assessment. You will have to raise an invoice, you will have to assess the taxes and pay the taxes, collect the taxes and report it. Now, when you make any sales, all the sales has to get summarized together and filed in a return. Okay, you yourself will have to do it. That's why this is called as self-assessment. You are assessing yourself what is the value. You are assessing the tax what is liable on that, and then you pay that to the government. So in the self-assessment scheme, you will have to calculate the taxes, what is the output. The provisions are given in the law. You have to apply the law and give the summary to the government. Now this tax liability register calculates the liabilities of the taxable person in the form of tax, interest, fees and penalty. Now, how does this taxable amount comes from your GST returns? Firstly, then if the authorities do any assessment or any adjudication proceedings, then they will also decide the tax liability. That also comes and gets debited in your electronic liability register. Now, I've said form of tax, interest, fees and penalty towards CGST, SGST and IGST. So, you know that any transaction which you make intrastate, you'll have to pay CGST, SGST. So there are two governments involved. CGST is the central government, SGST is the state government. Will there be two liabilities? Yes, there are two liabilities which get added up. But in your electronic liability register, you'll see two different ledger. CGST is different, SGST is different. I'll show you a sample electronic register also, so that you can understand how the government sees it and how the assessee sees it in their portal. So this CGST is different, SGST is different. The assessment will happen by one authority itself. There will not be different authorities doing assessment of the same transaction. And the tax liability register will reflect the total liability of a taxpayer after netting off for the particular month, that is through your monthly returns. Then you have input tax ITC ledger, or which is also called as electronic credit ledger. The input tax credit as self-assessed in the monthly returns. So this is also self-assessed basis in your monthly returns. You will accumulate all your input tax bills, total it up and show it in your GSTR 3B, which is your monthly returns. Okay. Now this ITC ledger, electronic credit ledger, can be used for making payment of tax only and nothing else. So there is a distinction between input tax credit ledger and the electronic cash ledger. Electronic credit ledger can be used only for payment of tax. Electronic cash ledger can be used for making payment of tax and other amounts also. What are these other amounts? These are the TDS. Now, if you are a person who is liable to pay TDS, so this payment can be made from your electronic cash ledger. You have to pay TCS. This also can be made from the electronic cash ledger and not from the electronic credit ledger. The information is reflecting on a real-time basis because the payment happens online. Everything happens on a real-time basis. Details in these ledgers gets auto-populated from the return file. Which one? The electronic liability register and the electronic credit ledger gets auto-populated from the returns file, but the electronic cash ledger doesn't get auto-populated because electronic cash ledger depends on how much amount you make the payment for. Once you make the payment, the electronic cash ledger gets credited to that extent. Now, both the ITC ledgers and the cash ledgers will be utilized by the taxpayer for discharging the tax liabilities of the returns and other liabilities arising out of demands, appeals and orders. The electronic credit ledger and electronic cash ledger will be utilized by yourself for discharging the tax liabilities what you have assessed in your monthly returns. These ledgers would be updated on a real-time basis on an activity action by the taxpayer. So you have to take the action for any debit or credit in these ledgers. It cannot be touched by the GST authorities directly. You have the responsibility, even though it is there in the government's portal, you have the authorization to move any credit from the credit to the liability register, from the cash to the liability register. The government will not interfere in this. Balance, if any, in the cash or credit ledger may be refunded. Now, you have to understand cash ledger in terms of a bank account. You are depositing some money with the bank, you can withdraw that money from the bank account. Similarly, electronic cash ledger is like a bank account there with the government. You have made the deposit over there. You can use it for payment of taxes, and you can claim refund also. A refund procedure is not that simple, because you have to claim for your refund. The authority will not straight away give. He will look into your case saying that why do you need the refund when you have the regular tax payments going on. So he will check that and then give you the refund. Similarly, electronic credit register, electronic. See, I said this is a tongue twister. So I also twist my tongue sometimes. So electronic credit ledger also, if there is any balance, you can claim refund of that, but they are subject to some conditions. These refund provisions you will learn in the finals, but you need to understand that there are some provisions with like this, which is there in the law. Yeah, this gives you a clarity on what is your payment of tax. Section 49, which says payment of tax, you have to maintain two ledgers, electronic cash ledger and electronic credit ledger. Now, what happens in your electronic cash ledger is this. You have a electronic cash ledger created once you register. Similarly, electronic credit ledger and liability register also gets created when you register itself. Once you register on your portal, you will find that these electronic ledgers are maintained by you, of course, with a balance of 0. It is not like a e-commerce company that once you log in, then you will get joining offers of 500 rupees. Nothing of that will be there. This electronic cash ledger and electronic credit ledger will have 0 balance when you first register. Now you will have to credit these ledgers. Electronic ledgers. Now, when we say ledgers, it is equivalent to our ledgers, what we have studied under the accounting. Okay. So ledgers will have balances, will have transactions. Now you have to credit these ledgers. How will you first credit the electronic cash ledger? Is through payment through various modes. Now we will read through what are the various modes of payments. Now whenever you make payment through those 3 modes, the amount gets credited in your electronic cash ledger. Okay. Plus, you have made a transaction on which the other party deducts the TDS or he collects TCS. That amount, when he remits it against your GST number, that also comes as a credit in your electronic cash ledger. Okay. So credit in your electronic cash ledger are through 3 modes of payment, plus TDS and TCS. Okay, this is the credit in the electronic cash ledger. Now, how will you debit it? What will you utilize this credit for? By debiting the amounts for payment of tax, interest, penalty, fees, or any other amount. Okay, payment of tax would mean whatever taxes you have to pay, you can pay from your electronic cash ledger. Okay, and if you have to pay any TDS, now there could be a scenario when somebody deducts TDS, and there could be another scenario when you have to deduct TDS and pay to the on behalf of another person. You have to deduct it and pay to the government. This also can be from the electronic cash ledger. Moving to electronic credit ledger. I hope electronic cash ledger is clear. Debit credit will be payments from various modes plus TDS plus TCS, and you can debit it for anything and everything. You can tell it like that because electronic cash ledger is the vast thing wherein any payments of taxes and other liabilities can be made from the electronic cash ledger. Now we'll move to electronic credit ledger. Electronic credit ledger, the credit comes from the input tax credit on a self-assessed basis. This self-assessed basis is your GST monthly returns. When you assess saying that these are my credits, this comes and sits as a credit in your electronic credit ledger. Now this credit you can utilize, you can offset this with only payment of output tax under this law or the IGST law. So you can, you have a limited, restricted use of your electronic credit ledger. The credit comes not from payment, not from TDS, not from TCS. It comes from yourself claiming credit of your input tax credit in your monthly returns. You have learned what is input tax credit, how it works, what are all the credits, eligible, ineligible. So only eligible credit will come and sit in your electronic credit ledger. From this credit ledger, you have to make this credit utilized for payment of output tax under the law. Other tax, other interest, penalty, fees, late filing fees, cannot be utilized from the electronic credit ledger. You can utilize only for payment of taxes. Let me take some questions here. Can we pay tax by cash without setting off ITC? You can pay. Now there is a question which says, sir, you're talking about electronic credit ledger, electronic cash ledger. Say I don't want to use the electronic credit ledger. Why? There could be various reasons. You are very much honest to the government, and you're saying, honest is one thing, but you are saying that no, I want to help the government and I don't want to utilize the credit. Yes, you have an option. The figures gets auto-populated saying that this is the credit, utilize this, because most of us will utilize the credit, but you can make that zero saying utilization from the credit I don't want. I want to make payment only from my cash. Yes, you can do that. IGST is the separate register. See, I will come to major heads and minor heads, but we will understand there that CGST, SGST, IGST and CIS are the four major heads which are there. Under this you have again minor heads. So IGST is a separate register. Yes, it is a separate register. TDS under GST is not in syllabus. Yes, so we will not learn through the TDS provisions in detail. That's the reason if you see, I'll just go back and tell you what all we are covering. There is a gap here after 50. Where is 51 and 52 gone? 51 and 52 are the TDS and TCS provisions, which is not relevant for your examination. So we will not get into 51 and 52. But the credit in your cash ledger and credit ledger will come from TDS and TCS. That is relevant, right? Because in the question they will tell TDS has been deducted. You cannot just tell no, it is out of syllabus. That credit has to be credited in your, you will have to take that for your calculation purpose, and that TDS has to form as a credit in your electronic cash ledger. That's the reason, to the extent how much it is relevant, we are covering it here. Sir, could you please explain difference between electronic credit ledger and electronic input tax credit ledger? Electronic credit ledger and electronic input tax credit ledger is one and the same. Instead of giving it a big name of electronic input tax credit ledger, the government has used a small word called electronic credit ledger. So both are the same. The term used in the law is electronic credit ledger itself. Can you please explain credit of TCS and TDS in electronic cash ledger? Yes, I will explain this again. So when somebody deducts TDS and TCS, it is like equivalent to the TDS under the Income Tax Act. When you make a transaction, somebody deducts TDS, they will deduct that TDS from the payment they make to you, and that credit comes in forms in your electronic cash ledger. Similarly, when I make a sale of say 1 lakh rupees with GST of 18%, 1,18,000 is the sale, I have to collect from him 1,18,000. Now instead of paying 1,18,000 to me, he will deduct some portion as TDS. Say 1% is the TDS. Let us take an example. On the 1 lakh rupees, 1,000 is the TDS. That 1,000, instead of paying to me, he will pay to the government's account and say that I am making this TDS payment on behalf of this supplier. Now, when he deducts that he will pay to the government saying that this is the TDS amount with this GSTN number. This TDS has to be credited to this GSTN number. That person, once he filed the TDS return, that amount comes to me as a credit in my electronic cash ledger. Okay, this comes as a credit to me in my electronic cash ledger, and I will utilize this. This becomes a part of my kitty. So when I transfer a check to somebody, that gets debited from my account and gets credited to your account. Similarly, this TDS, once he deducts and he remits to the government, it gets debited from his account. It comes as a credit in my electronic cash ledger. Clear? Next question is, in cash ledger credit, when we deduct TDS, whenever you have a liability of TDS payment, you will pay the TDS from your electronic cash ledger. It is not part of your monthly return. There is a separate return for TDS and TCS. Once you file this return, then you have to make the payment as well for that. We debit cash ledger. The next question is we debit cash ledger by an amount we have to pay and credit by TDS of that person. Correct. Debit and credit works in that way. TDS and TCS from income tax is different, dear friends. TDS and TCS under income tax get credited on a PAN basis and on your PAN level. But that TDS and TCS is not what we are talking about. There is a separate provision of TDS and TCS under the GST law, which is what we are talking about, saying that when you make a sale transaction, the other person will have to deduct TDS on certain transactions. Only those transactions like e-commerce operator, we were speaking right the other day, e-commerce operators have to deduct TCS. When you're making any supply to government agencies, they have to deduct TDS. Those transactions when deducted from the GST values gets credited here and not the income tax TDS and TCS. Let's move ahead. Last question. Please explain difference between payment of tax from cash ledger and payment of output tax and credit ledger. We'll understand that when in the further slides in a diagrammatic manner how we pay the liability from the electronic cash ledger and electronic credit ledger. Now, electronic cash ledger, these provisions are given in section 49.1 and 49.3, followed by Rule 87. Rule 87, we have seen that electronic cash ledger and it is to be maintained PMT 05. Now, electronic cash ledger is a summary of all the deposits made or payments made by the taxpayer. All the deposits what you make, payments what you make comes as a credit in electronic cash ledger. Now, electronic cash ledger and credit ledger, these are asset ledgers. So you will see that all the credit side gets accumulated for the additions and all the debits is for the reductions. Cash ledger, it's like an asset one. So it's when an asset increases, the asset side increases, right? So when you make a deposit, when you make any payment, the credit in this ledger increases. Electronic cash ledger increases. Treat it like a bank account itself. Like when you make a deposit in your bank account, your credit balance increases, right? When you withdraw or when you make any payment, that balance gets reduced. So credit and debit, credit is increase in your electronic cash ledger and debit is your decrease in your electronic cash ledger. The date of credit is on receipt of CIN from the collecting banker. What is the CIN? This is called as Challan Identification Number. Once I make the payment through any of the modes of payment, a challan gets generated. On generation, on receipt of a challan identification number, the credit in my cash ledger is reflecting. So amount is credited means the amount is reflecting in my cash ledger. I can utilize this for payment of various things. This is the date of credit in the electronic cash ledger. Date of debit is next thing. Date of debit from your electronic cash ledger. First is credit. You made the payment. There is a credit in your electronic cash ledger. Then the date of debit. When once is credited, the balance is increased. Now how will the balance reduce once you make the payment? This is date of debit. This date of debit coincides with the date of debit. Date of your debit is equal to date of credit. Once the government gets the money, that is once there is a credit in the government's treasury. It could be the central government or the state government. Once they have got the credit, your balance gets debited. Now it all happens instantly. It doesn't mean that somebody has to wait that till the credit happens, then it will happen a debit. Everything happens instantly through the technology, wherein you trigger saying that offset your electronic cash ledger with the payment. Immediately it gets credited into the government account and it gets debited in your electronic cash ledger. Okay. Now this why I've made a distinction here is the date of credit in the government's treasury is not same as your payment. So you can imagine a situation when you have made payment of taxes through a challan. Now all the taxes has to be made payment through a challan. Now once you make payment to the challan, that is not the date of payment of tax. That is only a deposit in your electronic cash ledger. There is once I go to the bank, make an online payment. Okay, that is the date. Everything has happened. Now CIN has come. This is not considered as the tax payment itself. Okay, like unlike other laws, like you have income tax law. You go to your income tax portal, make the payment of tax. Immediately once you make the payment, it goes to your government account. But here it doesn't go to the government account. You cannot tell it is going to the treasury of the government yet. It is held in a kind of escrow account, because electronic cash ledger is still under your control. You make the payment, and once you make the payment, it goes and sits in your electronic cash ledger. It has not yet gone to the government treasury. It goes to the government treasury once you debit the electronic cash ledger, and it gets credited into the government's ledger. Okay, so there is a difference in crediting of cash ledger and debiting of cash ledger. Date of credit of cash ledger is date when you make the payment. This is not equal to the date of credit in the government treasury. Date of credit in the government treasury is when you debit your electronic cash ledger, then it goes and gets credited into the government's treasury. Payment of tax. What are the various features of payment of tax? It is a electronically generated challan. Now I have decided that I have made these. I have kept my returns ready, right? अभी मैं क्या कर सकता हूँ? I can go and make the payment. So can I tell the government, okay, I'm ready to make the payment, please come and collect it? You cannot tell that. Okay, under earlier laws, you had an option of going to the bank and preparing a challan. Okay, you can prepare an offline challan, fill up all your details, go to the bank and make the payment. But there used to be a lot of confusions. That's why under the GST law, you have to pay taxes from the electronically generated challan. Even if you want to pay, go to the banker, the challan has to be extracted from the portal itself. From the portal, you will go and make the details available on the portal, and the challan gets generated. You take a print of the challan and then go to the banker. Okay, there is no concept of manually preparation of challan. Challans are always prepared from the GST portal itself for all modes of payment. Even if you have to make cash payment, go to the portal, enter this is the amount I want to make the payment, and download the challan, print it, then go to the banker and pay the cash there. So collecting agencies are all banks. It cannot be any other person. So challans are electronically generated itself. This is you might have a theory question on what are the features of payment of taxes under GST. These are the various features. This is an electronically generated challan from the GST portal. It is a facilitation for the tax provider by providing hassle-free anytime, anywhere mode of payment. Now, anytime, anywhere payments can be made, and online payments can be made, offline payments can be made. Your challans are not different. One challan for various modes of payments. So there is no confusion of different types of challans for different modes of payment. Cash ke liye different challan, credit ke liye different challan. No, only the option gets changed, but challan remains the same. Convenience of making payment online, fine. You can make the payment online anytime. No problem. Just log into your bank, go to the GST portal, mention the bank details. This will get redirected to the bank account. Put your bank credentials, and then the payment is made. Logical tax collection data in electronic format, because in electronic format, the tax gets collected in a logical manner. Correct. It gets credited to the correct head, CGST, SGST, and IGST. Faster remittance of tax revenue to the government account. The government does not have to make, once you make the online payment, immediately it goes and credits to the government account. And that's what we've been discussing, that it goes and credits in the electronic cash ledger. From there, on a click of a button, it goes to the government account immediately. Paperless transactions, no paperwork required unless you have to make your cash payments or your NEFT and RTGS. So you don't have to keep separate challans. Earlier you used to have duplicate, triplicate challans. Okay, for any tax payment, you used to have 3 copies. Okay, even in the present TDS I was seeing, there are original, duplicate, triplicate. Then the bank takes the first copy, second copy it gives to you, third copy it retains. Nothing of that sort. One challan itself, you go to the banker. No, you don't have to make duplicate and triplicate copies at all. TD accounting and reporting, because payment happens online, so everything is in a speeder manner. Electronic reconciliation of all receipts. Reconciliation also happens of the receipts. So you have something called a CIN, Challan Identification Number. We will see how it works. Challan Identification Number comes in, and the reconciliation also happens in a faster manner. simplified procedure for banks also. There is no hassle for the banks. You go give the challan, they make the payment, or you're making payment online. The challan is linked to the bank. The banker sees the challan identification number and gives the credit to your electronic cash ledger. Warehousing of digital challan. So once you make the payment, the challans are available in the portal for few certain period. Not that all challans gets there, but at least recent transactions, at least 8 transactions I've seen that last 8 transactions appears on the portal. So this becomes like a warehouse of your digital challans. I will take up more questions once we cross through the electronic cash ledger. Before we move to electronic credit ledger, I will answer your questions. Payments to be made for, we know what are the legal provisions for intrastate supply taxes to be paid as CGST and SGST. For interstate supply taxes paid as IGST. Apart from CGST, SGST and IGST, you have other payments also. Certain categories of registered person will be required to pay to the government, tax deducted at source and tax collected at source. Okay, apart from taxes, you have TDS, TCS, and you have other liabilities also, which are interest. We will read interest liability, how much is to be paid in section 50. Penalties have to be paid because penalties happen on adjudication proceedings. The department authorities has the power to determine the penalties. So you will, apart from taxes, you have to pay interest, penalty, fees. What is this fees? Late filing fees. The GSTR 1 and 3B has to be filed within the 10th and 20th. GSTR 1 10th, GSTR 3B on the 20th. If you delay in those filings, then you have the fees which has to be paid, right? And any other payments, it can be any other payments which has to be made. All of these things are paid through your electronic cash ledger. Now, liability to pay tax arises in 3 ways. One is supplier of goods or services. You are a supplier of goods or services, you have to pay. Second category is under reverse charge. Once you make import of services, then you have to pay under reverse charge on that. And there are other liabilities or reverse charge, like we gave an example of a lawyer providing services to you, you have to pay under reverse charge. So apart from supplier of goods, these are the categories when the receiver of goods or services also pays. So you have to pay on the legal services received. Then there are certain goods which are there under reverse charge as well. Like there is a notification which says on these specified goods, the liability has to be paid by the recipient. So if you're buying those goods specifically, then you have to pay reverse charge. Other example of reverse charge under services is goods transport agency. A goods transport agency providing services to you, you will have to pay taxes under reverse charge basis. Security services, security provide services to you, you will have to pay GST on that. The notified cases of intrastate supply of services, the liability to pay GST on may be cast on e-commerce. Now, I am a supplier and somebody is receiver. Apart from both the supplier and receiver, we've seen the first category is a supplier, second category is receiver. Apart from these, there are some categories when on the same transaction, e-commerce fellow have to pay the transaction, not me. Like we have seen in the case of taxi cab charges, hire charges. The taxes are paid by the e-commerce and not by the supplier nor the recipient. Now, modes of payment of taxes we've seen. We have just had a brief, but here is a detailed discussion on that. You can make payment through online or offline. Online is through internet banking or by using credit card or debit cards. Okay, you go log into your portal. There you select online payment as e-banking, and then it leads you to your bank account and you make the details. So this is the online mode. Okay, offline mode is through NEFT or RTGS. What is NEFT and RTGS? National Electronic Fund Transfer or real-time gross settlement. These are the facilities made available by RBI through the banks. So I can make online payment itself through NEFT RTGS. I can make offline payment of NEFT and RTGS. Means I have to go to the portal, take a challan. Then in the challan, I have to mention payment mode as NEFT. Then I print the challan. Once I make the payment as NEFT, the challan gets generated. The amount doesn't get credited yet because I have not made the payment. The challan as a first step gets generated. From the challan, I take this challan and go to the banker saying that this is my GST number and this is my GST challan. Please make this payment on my behalf. So he takes it, he credits your account, he debits your account, your bank account to that extent, and he triggers this NEFT transaction. Now, NEFT and RTGS, there is a difference in terms of the limits. NEFT has a limit of up to 2 lakh rupees and RTGS is for payments above 2 lakh rupees. That's the only difference. Once you go to the banker, he takes that and gives you a challan PIN number. Once the amount gets credited, amounts get reduced from your bank balance, then he gives you a proper challan. Okay. Apart from this offline, there is another offline mode called as over the counter. Now, what is over the counter? Apart from NEFT and RTGS, you have another mode which is over the counter. You give the challan in your same way. You have to go to your portal, mention all the details, mention the amount, and select the option as over the counter. Once you mention as over the counter, you can make payment. You have to again print the challan and go to your counter, go to the bank counter. You can make payment of up to a maximum of 10,000 rupees. Is this 10,000 rupees per day, sir? No, this is not per day, sir. This is per challan per tax period. For each tax period, up to 10,000 rupees is the limit. Not that I will download the challan today for 10,000 rupees, tomorrow 10,000 rupees. Aise karke, I will not make 5 days continuous downloading and pay cash for 5 days, 50,000. No, sir, this is not permitted. You have to make 10,000 rupees per challan per tax period. The government is clear that they want to reduce the cash usage. That's the reason they've said per tax per challan up to 10,000 rupees. If you have liability, they will permit it. You will go to the banker, either give him cash or give him a check or a demand draft. Okay. This is the over-the-counter payment of mode of payment of taxes. The date of credit to the account of the appropriate government shall be deemed to be the date of deposit in the authorized bank. Once the banker, if it is online, it triggers it and it goes to the government account immediately. Or if it is NEFT and RTGS, he will do the procedure at his end, credit it to the government's account. That is when it is treated as a date of deposit in the bank, and it is not date of presentation of check. Once you give a check, that has to get cleared. It has to go to the other banker, the issuing banker. It has to get cleared. The check has to get cleared. Only then it goes to the government account and not on the date of presentation of check itself. Now, I said over here that over the counter, there is a limit of 10,000 rupees. For this online transactions through internet banking and through NEFT and RTGS, there is no limit. It can go for any amount, but for over the counter, there is a limit of 10,000 rupees per challan. Now, this 10,000 rupees has an exception. This is mostly a likable question saying that over the counter limit of 10,000 is not applicable in which circumstances. So these are the 4 circumstances. Deposit is made by government departments. So if any tax has to be paid by the government department, is tax liable on government services? Yes, government services also. There are specified services on which GST is payable. Okay. Now, if the government provides any rental services, provides rental of premises, the government has various facilities of community halls. Now, they give some collect some rent for provision of this community halls. On such transactions, government has to pay GST. ऐसा नहीं है कि government is there, so government GST goes to the government, so other government will not collect. No, each government has its role to play. There is a government which is in the finance ministry is different, and the other governments are different. So any transactions done by the government also is liable to GST. So deposits made by government departments, there is no limit of 10,000 for them. Then a proper officer or any other officer who is authorized, okay, a proper officer who is authorized to recover outstanding dues from any person, whether registered or not registered. Unregistered person say be, if they have to collect something through recovery modes, they go attach the property, they go sell some assets of the taxpayer, or it could be a registered taxable person who is not registered. For him, if they have found out that he has to pay taxes, they will do a recovery proceedings and recover the taxes from him. Once they recover this taxes, this amount, if it is recovered through cash, then what will they do? They cannot do anything. This has to be paid to the bank account with the GST of this person, right? Now this recovery, even if it is more than 10,000, they can make the payment over the counter by mentioning this GST number. So second scenario, first is deposit by the government departments. Second is when a proper officer does any recovery proceedings and any cash is recovered, then that can be deposit. Okay. Third is similarly in case of a proper officer or any other officer authorized for the amounts collected by way of cash, check or demand draft during any investigation and enforcement. During investigation and enforcement. Second case was in terms of recovery proceedings, which is recovery of taxes when it is a post identification case. Okay, but pre-case, before identification itself, if they are done any investigation or enforcement and they found that there is a liability which is to be paid and this person will run away after the enforcement happens. So during investigation and enforcement, they can collect cash and check and deposit that to the portal through the offline transaction mode, wherein the amount can exceed 10,000 rupees also. There is no restriction in these two cases as well. So proper officer does any recovery proceeding or proper officer does any investigations, then also they can make the payment to the over the counter without limit of 10,000. It can go beyond 10,000. And fourth instances, deposit can be made by person which is notified by the commissioner. There's this is a power available to the commissioner to make payment, but nothing has been notified till now. Clear? So over the three things: online, through internet banking, or by using credit card or debit card. Here there is no limit. And practically, for theoretical things, yes, credit card, debit card you'll have to mention, but practically debit card, credit card is not yet activated. So it is only through internet banking. Offline mode, NEFT and RTGS. Offline mode is again kind of banking mode itself, but offline mode, this is again offline mode because you will download the challan and go to the banker. NEFT, RTGS or over the counter payment. Please explain difference between the payment of tax from cash ledger and payment of output tax. This we will discuss when we say how payment is utilized from the cash ledger and credit ledger. Can we utilize TDS of financial 18-19 for making payment in financial year 19-20? Very good question. TDS is like a payment of tax. Now, can this is possible, I would say. So TDS of last year gets credited in your cash ledger. This has the color of the credit in your cash ledger itself. Okay, you credit it. Now last year's 18-19's TDS is got credited in my cash ledger. Now I will utilize this either making payment of this year or next year. That is up to me, because once it goes into electronic cash ledger, then there is no difference. It is all one and the same. Then you will not make a distinction between TDS amount and cash amount. All of those goes and lies as a balance in your electronic cash ledger. There is no distinction of TDS of last year, TDS of current year and things like that. There's no separate colorable things on your year. Either you make cash payment or you make TDS payment. TDS get the amount from your TDS thing also. It is same. There is no distinction. So in nutshell, TDS deducted of last year gets added to your electronic cash ledger, which you can use for next year payment as well. Not like your actually like your income tax, wherein TDS of that year has to be claimed in that year or it can be pushed for next year. But in GST, once the TDS gets credited, it goes and lies in your balance, which you can use this year or next year. Very good question. Similarly, I would ask you another question. Now, once I've made payment in my electronic cash ledger, does that have any time limit? No, there is no time limit. I make payment in my electronic cash ledger that sits in the balance in the electronic cash ledger. There is no expiry date of that. Okay. Similarly, electronic credit ledger also, once there is a credit given in the electronic credit ledger, it means I've claimed the credit. There is no time limit to utilize that. You can utilize for any number of years, either this year, next year, any number of years. There is no outer time limit for the utilization of electronic cash ledger as well. Can we get refund from the electronic cash ledger if unused? Yes. If there is a cash ledger and it is unused, you can get the refund of this. But there is a amendment which says that if you have made deposit in your wrong ledger, so you have to make CGST payment, but you have made IGST payment, you can transfer that amount from IGST to CGST. So you would not go to refund practically, but theoretically, yes, that is possible. Practically also it is possible, but you will not go for it. I mean, from a logical sense, you will not go, because again, next month you have liabilities, so you have to pay. So you will not claim the refund, then go back. So you will not do that. Payment of tax should be made through registered person's bank account. Yes, it should be made from the registered person's bank account, or it can be made from other bank account also. So if you have to make from other bank account, then online option will not be possible because you do not have the login of the other bank. So you will go for NEFT RTGS option, take the print of this and go to the banker, go to the other bank and tell I want to do this NEFT and RTGS transactions. For that, you will have to still give your bank account details itself. And it cannot be through a check, because then the over the counter limit comes, wherein then there is a limit of 10,000 rupees. Okay, I will repeat this. Now I have an account with State Bank of India. Now I don't want to make and I don't have online facility. I have a bank next door, which is say Canara Bank. Now I want to make payment through Canara Bank and I don't have an account with them. Okay, what will I do? I will I have two options again. NEFT RTGS facility, first thing, NEFT options. I will download the challan with the instructions of NEFT and RTGS. Go to this Canara Bank saying I want to do NEFT RTGS for my tax payment. I will give him a NEFT RTGS mandate form and tell him that this is the payment which I want to make. So he will take those details and tell, okay, I will do NEFT RTGS. There is no limit applicable. Another option, second option is over the counter, wherein I say, okay, I will download the challan and select the option as OTC. Then I have to select whether I want to make cash, check or demand draft. Again, under OTC, you have three options: cash, check or your demand draft. So you will take this, select one of these options, go to the Canara Bank person and say that I want to make this payment. He will honor it, but with a limit of only 10,000 rupees, because that is the outer limit available. Yes. This answer is cleared now. Payment of tax through Paytm and Google Pay. Well, this is not possible. Payment from Google Pay and thing is not yet activated. Those are restricted by the RBI, so you cannot make payment from them. What is DRC03 and when it is used? Well, this is not in our syllabus, but to understand, DRC03 is like self-declaration of any taxes which you have not declared in your returns. You can declare your taxes in your returns, but say in your annual returns, you find some error which has happened for the year say 18-19. Now 18-19, you have a time to revise those returns and everything by September of the subsequent month, which is September 2019. Now that time limit is over and you have to make some payment in your annual returns, which you will file now. So once you have something like that sort, then you will make payment through DRC03. This is also a kind of offset challan. So DRC03 is available in the portal. You have to again select from there whether you want to make the payment from cash ledger or credit ledger itself. So DRC03 is a type of adjustment of a type of acceptance of your liability. Now you do not have to make payment against DRC03. Challan is against the same. Once you make the payment of challan, it goes and sits in your electronic cash ledger. From your cash ledger, the amounts gets reduced to the extent of your DRC03. Payment of tax through NEFT done by us at home through internet is online. Yes, online also, if you make the payment through NEFT, that is an online and that is not an offline option. Because online also, when you go to internet banking, from the internet banking, it will ask you whether NEFT or RTGS, that is still a online mode itself. So NEFT RTGS is online mode when you go through your internet banking, and NEFT RTGS is offline mode when you go to your banker physically and download the challan. Renting by government is under reverse charge. Yes, I had just given you an example saying that deposit can be made by the government departments also for various other services. Venting, I've just given you an example. Sir, if the tax payment amount is amounted to 15,000, can we go for two mode at a time, 10,000 from over the counter and 5,000 from other board? Yes, over the counter limit is up to 10,000. So you can make up to 10,000 rupees for over the counter, and the balance you cannot make over the counter again. That can be made through online. So there is no strict, this is a very good thing. It clarifies that over the counter you can make 10,000 and online mode compulsory you have to go to 5,000 rupees, because everything will go and sit in your electronic cash ledger itself. Now, if you have some small amount also, you can make payment through online through different modes. Like today I have cash of 5,000, tomorrow I have 6,000, my liability is 15,000. So I will make 5,000 online deposit in my electronic cash ledger, tomorrow 6,000 deposit in cash ledger, balance of 4,000 rupees on the third day I can make the deposit. I can make split payments also, because everything will go and sit in your electronic cash ledger. The date of payment is effectively once you debit from your electronic cash ledger and offset in your GST return. Meaning of ad hoc deposit, right? This I had said here that during investigation or enforcement activity, the government can collect anything or any ad hoc deposit can be made. Ad hoc deposit means without any calculation, without any calculations also. The government can say, okay, this investigation is going on. While this investigation is going on, I want to make a deposit of 50,000 rupees. Okay, there is no calculation, but the officer feels that this much liability will definitely come and he has to pay. So this ad hoc is based on estimation or any amount which is based on his judgment, but which is not based on any calculation. This can be paid. This is called as ad hoc deposit. Can ITC be available of previous year in next year? Yes, sir. ITC of any number of years can be utilized. Once you have claimed the credit, you have to claim it within stipulated time. Once you claim it, now it's not possible that my invoice is dated 17/18 and you claim the credit. No, not possible. Credit of 1 year, invoice dated 18/19 can be claimed as a credit in 18/19, or if you have missed in that year, it can be claimed within 6 months from the end of the year, which is April हो गया, May, June, July, August, April, May, June, July, August, September. You can claim it within September's return of the subsequent year or filing of annual return, whichever is earlier. Okay, the time limit to claim of the credit is 18/19's credit you can claim within September 2019's return, which is being filed on the October 20th, 2019. Or annual return filed, whichever is earlier. If you filed your annual return, say, of 18/19 in August, so August will be the date, not the October 20th. Why I'm telling October 20th? September's return you will file by October 20th. So that is the outer limit, or the annual return, whichever is earlier, you can claim it. Once you have claimed it, that comes as a credit in your electronic credit ledger. You can utilize it for the sale of any future years. Credit is lying with you. You can utilize it for any future number of years. Credit within return of September annual return? Yes. Credit within return or return of September or annual return, whichever is earlier. Can correlate seems to be difficult. Please explain with example. Please let me know which point. I'm trying to give examples at the relevant points. So if any point is getting missed, you let me know. What is the aggregate threshold limit for both goods and services? We have seen 20 lakhs is the limit. Sir, if a person pays through wrong GST, then what is the treatment? Practically, this was the problem which was there under offline modes, but this problem will not come now, because when you go to your portal, you will pay your taxes. I cannot log into your portal. Anybody else cannot log into your portal, because the question is, what if I pay tax through a wrong GSTN number? I'm saying wrong GST number is not practically possible now, because you will go to your GST portal and you don't have to mention the GST number again. Okay, once you register, your GST number is there and you go and make the payment, the GSTN number comes automatically, so there is no chances of any mistakes happening. Correct? So when you generate the challan, the GST number need not be entered again, so that the error of mentioning wrong GST number doesn't apply at all. See, even in that case, I have 2-3 GST numbers of my clients, and I have mentioned, instead of paying for client A, I've selected client B. I've gone to client B's portal and made the payment. And the client also has authorized it through his bank and made the payment. Now what happens? That amount will come and sit as a credit in his electronic cash ledger. He can utilize this for his monthly returns, or he can go and claim for a refund. Okay. What is the validity period of CIN? We'll come to it, but the validity period of CIN is 15 days. CPIN, there's something called a CPIN wherein I generate a challan. Now once I generate the challan, it is valid for 15 days. Then I can make the payment within 15 days, otherwise it gets expired. Sir, if I made payment through online mode due to some technical issues, SIN was not generated, but payment has been debited from my bank account, then what should I do? Very good. There is an option called PMT07, wherein once the bank has debited it, but SIN is not generated, online mode itself, you have an option of representing to the officer, to the common portal. You don't have to go to your jurisdictional officer and everything. Everything is maintained online. Once the amount is debited, you provide your details, you provide a screenshot of your bank account, and online itself there is a procedure for grievance redressal, and it can get sorted out immediately. Online itself there is a possibility. Sir, annual return is 31st December, then how to claim ITC earlier? So the question is, sir, annual return due date is 31st December, then how can I claim ITC earlier? So the annual return due date is 31st December. The government cannot give you the ITC availability provision till there. The section of ITC gives you an outer limit of September return or 31st December, whichever is earlier. Now this September cannot get altered. If you have filed your return before, fine. Before the September, you can, that's fine. But if you have not claimed the return, you cannot go beyond September's return. Outer limit is September. Okay. We'll move ahead. I've answered most of the questions. Now challan. What is this challan? I'm talking about this challan, right? It is an electronically generated challan from the GSTIN for all the 3 modes. This is one challan which gets generated for all the 3 modes. You have to select the option. Now challan gets auto-populated. I'll come back to this. Certain key details of the challan, like there was a question on wrong mentioning of GSTIN. I can mention wrong GSTIN of name also, then no, you cannot mention it wrongly, because on your portal your name, your email ID, your address and GSTN is already saved. So when you generate the challan, this 4 keys comes automatically. There is no question of any mistake happening. Name, address, email and GSTN gets auto-populated. It is what is a challan? Is a 14-digit common portal identification number. So once you generate the challan at the first instance, you get a CPIN, common portal identification number. Who can generate this challan? I as a taxpayer can generate this challan. My authorized representative, who is a GST practitioner, okay, he is my representative. He can generate the challan with my GST number. Now once he logs in, he has the option to select my GST number. He can select it and generate the challan. Departmental officers during the enforcement activity, they can generate the challan. They have the authorization. So your portal is available to you and to very few people, either you, your authorized representative, or the departmental officer, or any other person on behalf of the taxpayer. That is in case of an auction or recovery by the state authorities. We have seen that the recovery proceedings can happen through an auction mode or any recovery proceedings, or in this example, in case of a enforcement activity is happening, then the department officer can say, okay, we have generated this challan and we are making the payment during the enforcement activity. Nobody else can generate your challan. Either you as a taxpayer, your authorized representative, a departmental officer, or any other person that is during a recovery stage by the authorities itself, departmental officer or the state authorities. And these details get auto-generated. Single challan for payment of all types of taxes. I have made an interstate supply, sir. I have to pay IGST, fine. Intrastate supply, I have to pay CGST and SGST. Should I generate 2 challans, sir? One for CGST, one for SGST? No, sir. you have to have one challan. One challan will give you the details of all the CGST, SGST, and whether it is tax, interest, penalty also. I'll just populate in some time a copy of a challan. You will get to understand how is the challan looked, so that you know that what are the various categories which comes in a challan. The validity period of the challan is 15 days. Once I generate the challan, if it is offline mode, I have to make the payment within 15 days. If it is online mode, once I generate the challan and then it gets saved, I have to make the payment within 15 days. I can make the payment instantly, or I can wait and make the payment later on also. However, once the date of CIN, once CPIN is a temporary number, kind of a temporary number, because challan gets generated with the CPIN. After I make the payment, then the CIN comes into picture. Challan would not have a jurisdictional location code. It will not have any jurisdictional location code. It is all tagged to your GSTN number itself. Separate jurisdictional location code is not mentioned in the challan and not required. Accounting authorities, tax authorities would send the taxpayer updated master data to GSTN as well as to accounting authorities. That is the back-end authorities also, they will send the data. Tax authorities will link the GSTN number to the authorities thing, and they will get the details of saying that within my jurisdiction, right? There will be jurisdictional departments within the jurisdictional branch. They will get to know how much is this person deposited. There is no separate requirement of mentioning the jurisdictional authorities in the challan. What are the basic features of the payment process? Challan can be edited before finalization. Before you generate, you can edit it, but after you have clicked on generate challan, then you can't edit it. Before that, you can make any additions. However, once finalized and CPIN is generated, no further challans can be made. Time of payment is early morning from 12 a.m. to 8 p.m. Only during this time you can make any payments you make after 8 p.m. will come back to you, and it will say that okay, are you authorizing this to make payment on the next day? If you say yes, then it gets paid on the next day, but the cutoff time is 8 p.m. System of electronic cash ledger on GSTN for each taxpayer. Yes, electronic cash ledger is maintained on GSTN for each taxpayer. CIN gets generated on successful payment. The CPIN is the initial thing. Okay. Once the payment is made, then the CIN gets generated. If CIN does not get generated, then the person may make a representation through the portal in form PMT07. One of the question was that, saying that I have made the payment, bank se paisa chala gaya hai, but I didn't get the CIN number. You make a representation through the portal through PMT07. They will resolve it, saying that okay, there is a technical glitch. Challan will get generated after 24 hours or something like that. Or they will tell okay, the amount has not come to us. The amount will get refunded to your bank account. One of this resolution you will get. Date of credit in state government treasury is deemed to be the date of debit in electronic cash ledger, right? You have seen this. Date of when the government gets a fund is when there is a debit in your electronic cash ledger, and not the date of credit in the electronic cash ledger. Credit in the electronic cash ledger is equivalent to your deposit in your bank account. Okay, utilizations of amount reflected in electronic cash ledger. Now, electronic cash ledger may you have various heads, major heads and minor heads. Why is this heads relevant is you cannot make a single payment and then expect that you will utilize towards CGST, SGST and IGST. No, you have major heads and you have minor heads. Major heads are IGST, CGST, SGST and cess. Under each of these minor heads, you will have various things. IGST may you will have tax, interest. In IGST, you will have penalty, IGST fees and IGST others. So each of these major heads have minor heads against it. Okay. When you make a payment of interest, you have to select whether it is IGST interest, CGST interest or SGST interest. If you selected IGST, then you have to select the minor head of interest under the IGST so that it goes to the correct government account. If you have any liability towards SGST, that has to go to the state government, so you will have to select SGST properly for that. And if you are making payment for an interstate transaction, you have to select IGST properly. Okay. Each of these will have separate minor heads. Now, amounts available under major head or minor head cannot be offset with another is the basic law which said you have to pay taxes under the correct major and minor heads. Okay, you should be careful while making the payment because amount available under one head cannot be offset with another. If you have an interest liability for a IGST transaction, then IGST, the electronic credit ledger of IGST interest should have that much of balance. Only then you can make the payment, because in your GSTR 3P return you will select saying this payment tax is for IGST, CGST or SGST, because each of these are separate. It cannot be clubbed as one together, as a bundle together. That's why you have this heads bifurcation. In your return, if you are making any interstate supply, you will say IGST is my liability. Once you say there IGST is liability, then you should have balance in your IGST tax. Then it will get offset. If you say IGST liability is there, and I'm not talking about credit ledger, I'm talking about cash ledger. Say, assume your credit is zero. You do not have credit and you have to make payment of taxes through cash itself. So any IGST liability is there can be paid by IGST balance in your IGST cash ledger. You cannot use CGST cash ledger to make the payment. The balance should be there, right? But now through an amendment through 49(9), it permits that. Earlier this was not permitted. This is permitted now with effect from 1st January 2020. You have made payment under wrong head. Say you had to make IGST tax payment. You have made CGST tax payment. Ho gaya payment. You can transfer this from CGST tax to IGST tax. Permitted now, which was not permitted earlier. So, but still, you cannot tell that government to automatically do it. You will have to do this transaction of PMT09. From PMT09 is an online option. You will transfer this amount from your CGST tax balance to your IGST tax balance. It is not automatic. Government will not pick up automatic tax. You will have to trigger the transfer from CGST tax to IGST tax. Then once you do the transfer, then your IGST cash balance increases. Then you offset this with your tax liability. Clear? So you should have sufficient balance in your respective major heads. If sufficient balance is not there, then you will transfer it from another ledger to your correct ledger through PMT09. This becomes a question which can come saying that do you have cash balance in your IGST and you have a cash balance is there in IGST and you have a liability in CGST. What will you do? Can you offset? Yes, through PMT09, this option is possible that balance from one major head is transferred to another major head and then the tax liability is offset. Okay. GST payment of taxes by the normal taxpayer on monthly basis by 20th. Cash payments will be first deposited in cash ledger and taxpayer shall debit the ledger while making payment in the monthly returns, right? Payment can also be debited from the credit ledger. Yes, we'll come back to this. Payment of taxes for the month of March will be 20th April, 20th of the subsequent month is the date. Composition taxpayers. Now composition, regular taxpayers will pay monthly. Composition taxpayers will pay on a quarterly basis. So they will pay on a quarterly basis by the 18th of the subsequent month. April, May, June. The due date is 18th July. They will also have to make payment through these modes itself. Now what are the various terms we have used? CPIN, SIN and other terms are there. CPIN is a common portal identification number which is a 14-digit number, which is valid for 15 days. So CPIN gets generated and which is valid for 15 days. Once you trigger the challan option, you get the CPIN. Then you get a CIN. Once the CPIN gets materialized, once you make the payment, it gets converted to CIN, which is a challan identification number. This is a 7-digit unique number, which is a 3-digit bank code plus your 14-digit CPIN. So 14-digit CPIN plus 3-digit code makes it as a challan identification number. Challan identification number is generated by the authorized bank or the RBI when the payment is actually received and credited to the government account. Once you make the payment, then the CIN gets generated. CPIN and CIN is the commonly used terms. Then you have a bank reference number for any payment you make. This is the transaction number given by the bank for payment made against a challan. Once a challan gets generated, CIN also will be there and BRN number also will be there, which is a bank reference number. Now, there is, after this bank reference number, you have something called as a EFPB, which is a electronic focal point branch. The RBI has said not all banks are permitted to make payment of the GST tax. Only authorized bankers have been made considered as the people who can collect taxes. So there are so many banks, but not all banks are the authorized banks. Very few banks are there. Now, each of these banks, when you go, they will nominate one branch as a focal point branch. Government said, boss, you collect taxes from various customers, but I will interact with one bank, one branch. I cannot go to all your branches. All your branches, you tie up with one branch. So they will tie up with one branch, which is called as a focal point branch. So if I go to State Bank of India will have one focal point branch, which will be the branch which will collect taxes from all its branches. All its branches will route it through this FPB. This will interact with the RBI so that any transactions it can have. Now this e-focal bank, each bank will nominate one branch as its EFPB for all India transactions. This EFPB will have to open accounts for each major heads with all the governments. All the branches gets focused on through the focal point branch. From this EFPB will have different heads, different accounts with major various heads. Like it will have account of IGST, CGST, and SGST with the RBI, and with the which will go to the government's account. For NEFT and RTGS transactions, RBI acts as a EFPB. What is the relevance of this EFPB is once you make any transactions, all your queries gets answered by this EFPB and not the individual branches. The individual branches will route your queries, will route all your questions to this EFPB, and EFPB will see whether the transaction is successful or not successful and other things. Now we'll quickly go through the workflow, because these are simple workflows to understand how the payment is made. So these are just to give you a practical understanding of how this gets generated. Generation first mode, which is your internet banking. Generation of e-challan at the GSTN. Taxpayer will select e-payment mode. He will select net banking by choosing the authorized bank. Then he will select the debit card or credit card in case of bank. Practically today it is not there, but whenever it comes, then debit card, credit card will have to be registered at the GSTN number, and then you can make the payment. Okay. GSTN will direct the taxpayer to the website of the selected bank. Okay. GSTN will direct you to the bank, then, and it also forward an electronic string to the selected bank carrying specified details. Taxpayer will make the payment using his user ID and password. On successful completion, EFPB of the bank will forward a confirmation string of CIN to GSTN on real-time basis. Then GSTN will credit the amount to the taxpayer's cash ledger. Once SIN is generated, that amount gets credited in your electronic cash ledger. Copy of the paid challan is available on the GSTN for tax of the taxpayer itself. Once the challan gets generated, it is available on your portal. Now we'll look how does a CPIN look. This is how a CPIN looks. The challan is generated on this date. It has an expiry of 15 days. It will have the CPIN number. Yes, sir. Screen is not visible. Is it clear now? Okay. So CPIN gets generated. Your GSTN number comes automatically. अच्छा. या अभी दिख रहा है? पीडीएफ दिख रहा है अभी? पीडीएफ नहीं दिख रहा है? आ रहा है. ओके, थैंक्स. So this is a challan which gets generated on the first instance. Yeah, it is called PMT06. This is the payment challan. CPIN number appears here. The challan generation date appears. Then the expiry date appears, which is 15 days from the date of generation. The GST number comes automatically. The name of the entity comes here, the email ID, the address, and the mobile number. Date of deposit. This is the major heads, what I was saying. CGST, IGST, cess, and this is in Karnataka, so the Karnataka GST will come here, which is by this goes to the central government, government of India, this goes to the state government. After this my major head, you have minor head of tax, interest, penalty, fees, and others. So you have to select the correct category of the major head and the minor head. Then the total gets added up and that gets paid. You select e-payment, over the counter, or NEFT RTGS. Particulars of depositor. If this is offline, then these details will get filled. Paid challan information will not come because this is only a CPIN stage. This is the initial stage. So this is the CPIN number. This is how the challan gets generated at the first instance. Once this payment, you say there the client has selected e-payment. Once they make the payment, then the CIN gets generated. What does the CIN look like? This is the final payment challan. This has the CPIN number, deposit date, which is the actual deposit date. Then CIN number. From the CPIN, CIN gets generated. The bank name, BRN number. This BRN number is the bank reference number, and the same details of the GST name, email ID comes. One thing to notice here is only the date of deposit is mentioned. Against which month you have made is not relevant, because whatever payment you make, it goes and sits as a credit in your electronic cash ledger with against the major heads and minor heads. Then you can utilize for any month, doesn't matter. Okay. So this is how a CPIN and this is how a SIN is generated after making payment of CPIN. We'll take a break here. We'll assemble after 5 minutes and move forward. Thank you. of payment from the electronic cash ledger works. This flow is only for your understanding to see when CPIN and SIN gets generated. Nothing to do with law, but a practical flowchart to understand how it works. So the taxpayer first goes to the GST network, that is a portal, generates the challan. Once he generates the challan, the CPIN gets generated. There he selects the mode of payment, or net banking, or credit card, or debit card. This, once he makes the option, then that goes to the net banking option of the bank. From there he mentions his login ID, password, mentions the bank details, and makes the payment. Once he makes the payment, it goes to the EFPB, the focal point branch, and they, on successful validation, generate the challan. This challan also appears on the GSTN portal. From there, it gets credited to the taxpayer's cash ledger. Okay, we have seen the challan that it does not have any day, any month or something like that. So it's like a deposit. From there, it comes and gets credited in the electronic cash ledger. Workflow for payment under NEFT RTGS. Taxpayer having account in any bank having NEFT RTGS facility can use this mode. This is also beneficial to taxpayers not having a bank account in any of the authorized bank. Like I have a bank account in, say, Lakshmi Vilas Bank. Now this is a small bank and this does not have a authority to make tax payments for GST. So when you go and select, even though I have online banking, I actually cannot go and make the payment because when I go to GST portal, it gives me a list of only few banks, in that my bank is not there. So what do? I go for an option of NEFT RTGS, okay, generate the challan and go to another bank, say State Bank of India, and say I want to make a NEFT RTGS. So I have to give them a NEFT RTGS mandate form from my bank account to the SBI. SBI will take this challan, which is generated from the portal, in which I will mention SBI Bank as NEFT RTGS. NEFT RTGS, when you select, you don't have to select any bank. Yeah. So when I will select the option of NEFT or RTGS and go to SBI with my NEFT details from my Lakshmi Vilas Bank. They will do the NEFT and make the payment. No limit on amount to be paid through this mode also. Payments to be collected by RBI directly, as RBI is the banker for this facility. So the EFPB will be the RBI and not the intermediary bank to whom I am going. Challan and NEFT RTGS mandate form is generated on the GSTN. Like the challan itself will be treated as a mandate form. Taxpayer to print a copy of the challan and NEFT RTGS mandate form. Practically, NEFT RTGS mandate form separately is not there. The challan itself has the NEFT RTGS mandate details. And of course, this is also valid for the validity period of CPIN is 15 days. NEFT RTGS validity period also will be 15 days. In challan, the field for name of the authorized bank will be auto-populated as RBI. So for NEFT and RTGS, the authorized bank is RBI. Certain details are auto-populated, like CPIN in account name field is auto-populated, GST and PIN in sender to receiver information field. So all this technical information will be auto-populated. Amount indicated for remittance will be transferred by the bank to the RBI through a UTR number. So this is a UTR, normal unique transaction reference number, where any NEFT RTGS payment when you make, the banker gives on successful validations a UTR number. Similarly, here also you will get a unique transaction reference number. RBI will validate the payments against each challan with UTI received from the remitter bank. RBI will report the receipt of payment to the GSTN in the form of CIN, and GSTN will credit the amount into the taxpayer's cash ledger. So everything is self-explanatory here. So it's only a process how the NEFT RTGS works. Same taxpayer will go to the GSTN. He will generate the challan and NEFT RTGS mandate form. Go to the banker. Banker will interact with the RBI through the RBI's EFPB, and it comes back to the GSTN. A CIN is generated, and the amount gets credited to electronic cash ledger. Last option mode of payment is over the counter. It can be made only through authorized bank. Now this also can be made only through authorized banks. You will have to go to the authorized bank similar to NEFT RTGS, generate the challan, but the NEFT mandate details will not appear. It will just appear as over the counter payment. Up to 10,000 rupees you can make payment by cash, DD or check, either in the same bank or another bank in the same city. Now it will not be in the same bank because my bank is not authorized. Now if my bank is authorized also, I can go and select saying that no, I want to make a payment through cash. And I will go to my bank if it is authorized. If it is not authorized, I will go to another bank. For check payment, name of the authorized bank and its location to be mandatory filled in the challan. In the challan, I will have to print it and mention the bank details and the check details. On real-time basis, GSTN will share the challan details with core banking system. Since I generate the challan from the portal, the GSTN will share the details with the core banking system, which is visible to all the banks. Payment mode under this 3, taxpayer will approach the branch of the authorized bank for payment of taxes along with instrument, that is a check or DD or cash. In case of cash, same bank instrument, a unique bank transaction number will be generated. Like how UTR is generated for NEFT RTGS, in case of this mode, BTR is generated, bank transaction number. Authorized bank will send receipt information in the form of challan identification number to the GSTN on real-time basis. In case of instruments drawn on another bank, okay, if it is same bank, it gets generated instantly. If it is a check drawn on another bank, then payment would not be realized immediately. The check needs to get cleared. Only then the challan identification number will get generated. Authorized bank will inform GSTN on a real-time basis in 2 stages. When an instrument is given over the counter, it will send an electronic string to GSTN with specified details of CPIN, GSTN. This is the initial thing. So it's like an acknowledgement. It will transmit these details to the GSTN. Then on final acknowledgement, after the check is realized, it will give 3 additional details. Apart from these details, that will give 3 additional details, which is CIN, CIN number, challan identification number, date and time of realization of the check, and bank transaction number. So there is a 2-way process which will happen here. Similarly, bank to issue acknowledgement to the taxpayer in 2 stages. Once he collects the challan, then he will acknowledge. And if it is through a check, then he will give acknowledgement of the check saying that yes, I have received the check. And once it is realized, then he will issue a bank transaction number and the challan identification number. GSTN will credit the amount in the taxpayer's cash ledger after the second stage, not at the first stage, because first stage is only a kind of acknowledgement. And the second stage, he will get credited to completely. The tax flow over here also is same. Taxpayer goes to the GSTN, generates and prints the e-CPN, e-challan, wherein CPN will get generated. Then authorized banker goes to the authorized banker. He makes payment through cash, DD or check. And then e-FPB gets generated. Then it comes back to the GSTN number. Once this e-FPB, the interaction with the GSTN happens instantly. The taxpayer can come and check the GSTN in his electronic cash ledger. That amount will show as a credit. Right. Before we go, there are some questions here. Credit can be used for interest. Balance in electronic cash ledger can be used for payment of interest. Balance in electronic credit ledger cannot be used for making payment of any interest. Payment of GST. Can I make payment of GS3 through online banking of friend or family or by CA is also allowed if the registered person do not have an online payment facility. So I will go, if I want to make the online payment, I can select the bank. From the bank, it will lead me to the bank's portal wherein I have to mention the login ID and password. So if the question is, can I mention there my friend's login ID and password? Yes, you can mention it there. So, but your details will be yours. Your GSTN details will be yours. The bank from which it gets debited will be somebody else's. So that is permitted. That is permitted. So for example, we have to make a payment of 10,000 tax and 1,000 interest under major head of IGST. Very good. So IGST, you have 10,000 tax and 1,000 interest. But wrongly, we made payment as 1,000 under tax and 10,000 under interest. Due to this, there is a due in tax of 9,000 and excess of interest is of 9,000. Can we make an offset utilization from excess of interest to deficit of tax? Yes, this is permitted now through a system called, this is what I had explained here. It is permitted. PMT09 permits this with now. So when in the question, if you get any date before this, then the adjustment is not permissible. So permission from IGST minor head from tax to interest is possible through PMT09 later on, not from 1st January 2020 and not before that. Yeah, there is some confusion. Major head and minor head, somebody has asked. Major head are the 5 heads, the main taxes. What we have seen in the challan also, there are 4 major heads: CGST, SGST, IGST, and compensation cess. These are the major heads. And minor heads are tax, interest, penalty, late fees, and others. So under these heads, you have major 5 heads. You have 5 minor heads. Okay, so tax has to be paid under the correct category so that it can go and get debited from your account and credited to your electronic liability ledger correctly. Sir, under which head of tax UTGST payment will be made? UTGST is equivalent to your SGST. It's like we are in a state, so we will have a state tax law. Union territory will not have a state tax law, they will have a union territory tax law. So SGST, either it will be SGST or UTGST, it will not have both. If I am in a union territory, the 4 major heads will be CGST, UTGST, IGST, and cess. Okay, they will not have SGST, they will have UTGST as the one of the major heads. Mode 2 is NEFT and RTGS payment, wherein I can make payment through NEFT and RTGS option if my bank is not the authorized bank. I will generate the challan from the portal, select the option of NEFT, go to the banker, tell him to do a NEFT transaction. He will do NEFT transactions and generate the challan. So nothing complicated in that, like how you make transfer of NEFT and RTGS. Similarly, you have to go to the banker and tell them to do a NEFT and RTGS. Okay. Is there any limited validity period for electronic credit ledger balance? As I said, once the amount is claimed within the period, once you claim the credit, how do you claim the credit? By claiming it, mentioning it in your GSTR 3B returns. Once you have mentioned it over there, it is a balance available with you for unlimited period of time. You can utilize it any number of years also. So first is utilization. Once you have claimed it in your return, it is available to you. The balance in your electronic credit ledger is available for a long time. That will not get exhausted. The adjustment is possible between major and minor head now. Yes, major and minor head, now it is possible. So new head on rules for utilization of amount in electronic ledgers. So first is utilization in cash ledger. Amount available in cash ledger under respective head may be utilized for making the following payments. Cash ledger can be made for payment of tax, interest, penalty, fees, or any amount. So you have to imagine this cash ledger as a universal ledger. You can utilize this balance for making any payments. Okay, but balance in electronic credit ledger can be utilized for making only payment of tax and nothing else. Available in cash credit ledger can be utilized only for payment of taxes, nothing else. Electronic input tax credit ledger is also called as electronic credit ledger. What is credit? To understand this, I've made a complete name saying electronic input tax credit ledger. Both are one and the same. The provisions of electronic credit ledger are contained in 49.245, and apart from that 49A and B, and the relevant rules are 86 and 88A. ITC is claimed on a self-assessed basis and mentioned in the monthly return. once you mention in your monthly return as the credit available, okay? Once you mention your monthly return as a credit available and file the return, that amount appears as a credit in your electronic credit ledger. It is on a self-assessed basis. Once you mention details in your GSTR 3B, that amount comes and forms part of your electronic credit ledger. This can be utilized only towards payment of tax. Electronic credit ledger can be used for payment of only tax. You cannot use this for making payment of interest, TDS, penalty, anything cannot be used. You can only pay the taxes what you have declared in your GSTR 3B. Tax, any tax? No, it means only output tax. Within tax also, you have something called as a reverse charge, right? Reverse charge mechanism, you have to make the tax payment. The reverse charge mechanism tax also cannot be paid through your electronic credit ledger. Why? Because electronic credit ledger, the definition section for the meaning of 49.4 says 49.4 electronic credit ledger can be utilized only towards output tax. On RCM also I pay tax, sir. So is it output tax? No, RCM is not output tax because definition of output tax is output tax in relation to a taxable person means the tax charged under this act on taxable supply of goods or services or both made by him, made by the supplier or by his agent, but excludes the tax payable by him on reverse charge basis. So there is a specific exclusion under the definition of output tax, wherein if I pay reverse charge tax, that is not an output tax. Okay, so that's the reason. That's a tax, of course, liable to me. So that's a tax liability on my reverse charge transactions. That is not a output tax. Output tax is tax only on the sale of goods or services which I make. Even though on RCM I have to pay, that is not treated as an output tax. That is the tax on reverse charge mechanism. And this tax on reverse charge mechanism cannot be utilized from the credit in my electronic credit ledger. Electronic credit ledger can be utilized only for payment of output tax which is declared in the monthly returns. What is the ITC utilization rules? This is very important. Now we have understood what is a credit ledger. The credit ledger may, whatever credit you have made some purchases, you have some expenses on which you have paid the taxes, right? Now you have purchased the goods, paid the value of goods to the customer, to the vendor, plus you have paid taxes on them, on that. Now that person will take your GSTN number, report that on the portal. Once he reports that on the portal, that comes as a credit to you, right? Now whatever taxes I paid to him, that is a credit available to me. Now this credit I will utilize. Now what's the point? The GST process itself said that you will not have cascading effect. You will not pay tax on tax again. So whatever is the tax you have paid to your vendors, you can utilize this for payment of taxes to the government. So on a transaction of 100 rupees sale, I have to pay 18 rupees. I will collect from my customer also 18 rupees. But from the 18 what I have collected, I have already paid say 9 rupees on my purchases. So I will offset this 18 minus 9 and pay the 9 rupees to the government account. Now this offset of 9 rupees, what I have paid to my vendors is offset through this electronic credit ledger. Clear? So offset of electronic credit ledger happens. Now there are another complications because I have 3 taxes in my hand and I have 3 credits. I have IGST credit, I have CGST credit, I have SGST credit. Now how will I utilize these credits is what we will see here. We have understood what is the credit. I have the credit. Can I utilize any credit for everything? There are certain simple rules which I have to follow for offsetting this credit for making the payment of taxes. First rule, section 49(5)(a) says IGST credit is to be set off with IGST liability. I have a credit lying in my IGST credit ledger. This I will offset for payment of IGST liability first. Credit of IGST has to go like with like. So IGST credit utilized for IGST, CGST credit used with CGST, SGST credit used with SGST. If SGST if it's a union territory, then it will be UTGST credit utilized for UTGST. That is the like with like first rule. IGST credit will be offset with IGST liability. I have a credit of IGST of 100 rupees. I have a liability of 40 rupees of IGST. So from this 100, I will utilize fully 40 for my IGST liability. Balance of 60 rupees is the credit which I have. Just imagine this. Instead of putting numbers, if you imagine this, then the numbers becomes easier. IGST, I have a credit of 100 rupees. Liability, I have 40 rupees. IGST liability of 40 rupees. From the 100 credit, 40 you will utilize for this payment of IGST liability of 40. Balance 60 rupees is the credit still available in my IGST credit ledger. I have now tax liability of CGST and SGST. During this month, I have made all types of sale transactions. That's why 40 IGST I have exhausted from the credit. Balance 60 rupees I can utilize for my CGST liability or my SGST liability in any proportion, in any order. It is not necessary that it should be 50-50 or it should be equal or it should be CGST first. No, that was the previous rule. What I'm saying now is relevant for you is first use the IGST for your IGST liability, then use the balance credit to offset CGST or SGST in any proportion. Okay, but you have to exhaust the IGST credit completely to utilize the other credits. Okay, then you will go to CGST. You will utilize CGST for liability of the CGST itself. Then the CGST credit, if available, you will use it to offset IGST. Okay, we will understand this with a diagram, but understand that CGST credit will be utilized for CGST. Then the CGST credit, if anything is still left out, you can utilize for payment of IGST tax liability. Similarly, SGST, you will utilize for SGST liability, like with like. SGST credit you utilize for payment of SGST liability. Then any credit balance which is available in SGST, if there is still some more credit, then you can utilize for payment of IGST. Okay, but there is no cross utilization permissible between S and C. SGST credit cannot be utilized for payment of CGST liability. If you have any CGST liability and you have SGST credit, nothing can be done. You cannot offset SGST with your CGST liability. Similarly, CGST credit cannot be utilized for payment of your SGST liability. CGST credit will still lie that any liability of SGST is there. You cannot offset this. You can offset the SGST's liability with SGST first. And if you have any credit of IGST, utilize that. If not, nothing can be done. You have to pay that by cash. You cannot utilize. So this ITC utilization is for the credit only. So first, again with that thing, IGST, you have IGST liability. You will utilize for IGST first. Then with SGST and CGST in any proportion. ITC of IGST has to be completely exhausted. Then come to your CGST input tax credit, utilize for your CGST, then utilize it for IGST. ITC of IGST has been utilized fully here. Only if it is fully utilized, then you can offset with IGST. Similarly, SGST utilize for any SGST output tax payable, then use it for payment of IGST. How do we understand this? This is your IGST bucket. You have a credit of IGST on all your import purchases, or it could be on reverse charge on import of services, a IGST transaction with you have done any interstate transactions. This is the credit available to you. This credit you will first utilize towards your IGST liability. If your IGST liability is less, then you will do like the 60 example, 40 example when we gave. It would have been 40 utilized, but if your liability is more than the credit, utilize the complete credit here. Once the credit is utilized, any balance of your IGST can be utilized for payment of CGST and SGST in any proportion. So this has to get completely exhausted. Your IGST credit has to get completely exhausted. Then you move to CGST credit. The CGST credit you will utilize for CGST first. Any balance available in your CGST credit can be utilized for payment of IGST. Still, if there's any balance in your IGST, then you pay by cash, but exhaust the CGST credit. Why government is saying IGST credit is IGST is like a platform, it's like a mechanism for facilitating CGST, SGST transactions, interstate and interstate transactions. So they're saying first utilize your IGST credit completely, then utilize your CGST credit completely, then go to SGST. SGST, if you have any credit and if you have any tax liability for SGST, utilize it. After utilizing there, then you go and use it for your IGST. There is no interplay, there is no interaction between CGST and SGST. CGST credit cannot be utilized for payment of SGST. SGST credit cannot be utilized for payment of CGST. What are the common points for electronic credit ledger and electronic cash ledger? When you claim any refund, okay, if any refund claim is claimed, the refund amount needs to be debited to the extent of refund claim. Okay. If I claim a refund from my electronic cash ledger, as soon as I apply, I have to debit the electronic cash ledger to that extent. I have to reduce to that extent. Whether it comes, refund comes immediately, it doesn't come immediately. But I have to debit it so that the government knows that you're not utilizing that and you're not claiming refund also both. Once you're claiming refund, you have to debit the balance, whatever is there in the ledger to that extent. If you're claiming refund of electronic credit ledger, then you have to debit electronic credit ledger to that extent. Then the refund get processed and things like that. Refund to the extent when gets rejected will be recredited. I have claimed a refund of 1 lakh rupees. So once I claim the refund, I will debit 1 lakh rupees. Now this is not there in my electronic credit ledger for utilization. That much is gone. Now when I go to refund authorities, he says, okay, I'll give you full refund. So nothing to be done now. 100 credit happened, that much cash he gave me to my bank account. But if he says, no, out of that 100, 80 is what I will give you, 20 is rejected. So I will tell, okay, give that amount back to me, 20 rupees. I will utilize for my other things. You give me 80 refund in my bank account, that's fine. But the 20 which you're rejecting, give it back to me in my electronic credit ledger so I can utilize it. So that is what I'm saying here. Refund to the extent which gets rejected shall be credited to respective electronic cash ledger or electronic credit ledger by way of an order. Okay. Take a few questions. Like in income tax, cess is on income above 50 lakhs. So it's such in GST? No. GST cess is not on the value of all the goods. Cess is on specified goods itself. Like you have cold drinks, you have motor vehicles. On that, on the transaction value, you have to charge the regular GST. On motor vehicles, I understand the GST is 28%. So 14% CGST, 14% SGST, plus cess is also applied in such goods. So it is not blanket that on all goods there is some fixed percentage. The percentage is fixed only on specified goods and it is not applicable on all the goods. What are the items to be debited in electronic debit ledger? There is no electronic debit ledger, electronic credit ledger. There is only electronic credit ledger, which is the electronic input tax credit ledger. There is no electronic debit ledger. I think you wanted to ask what you will debit from your electronic credit ledger. I'll explain you in 1 minute. Forward charge, credit, reverse charge, cash. I didn't understand your question. Forward charge, when you do any forward charge, right, on which reverse charge is payable, then it is not your tax liability, it will be the other person's tax liability. He will pay tax under reverse charge. So is ITC available on RCM? Yes, once you make the RCM payment, I have to make the RCM payment only through cash ledger because I cannot utilize credit ledger. Clear? Once I make the payment in cash, that is a credit still available to me. I can utilize it. Okay, first you cannot tell that my cash, electronic cash balance is 0 and I will make this RCM liability because anyways you will give me the credit. No, so I will utilize the electronic credit ledger. No, not possible. RCM liability, you will have to have balance in your electronic cash ledger to make the payment of the RCM liability. Once you make the payment, that credit itself which you have made paid through cash for the RCM is a credit available to you. Okay, now take this example. I have a bill of 100 rupees on which somebody has charged me 18 rupees as a credit, as a tax on that. So when I make the payment of 118 rupees to them, the 18 is available to me as a credit. That is a credit in my electronic credit ledger. Now the same transaction is on a RCM case. 100 rupees bill he gives. He does not charge me 18 rupees. Now I have to pay under reverse charge mechanism, right? So I will take the bill of 100 rupees and pay GST of 18 rupees on this. Fine. Now this 18 rupees, had he been under forward charge, had he been a regular taxpayer, then he would have collected taxes from me. Now instead of he paying, I am paying it. So why should I not get the credit? Government is saying, yes, you will get the credit of this. Pay the taxes of 18 rupees first. So you will report this as a RCM liability, pay the tax of 18 rupees, and this 18 you have paid. Once you have paid, this comes as a credit to you. This will get paid from your electronic cash ledger, and this comes as a credit in your electronic credit ledger. So IGST liability can be set off from IGST credit first, then CGST credit, SGST credit in this order. Correct. You're right. IGST liability can be offset from the IGST credit first, then CGST or SGST, whichever. Earlier there were orders saying that IGST, then CGST and SGST. Now there is no order. IGST should be fully utilized. Then you can utilize CGST or SGST in any proportion. That is permitted. Now you can utilize in any proportion. Sir, IGST credit is utilized, yet to be IGST liability is there. Then use the CGST or SGST credit. You can use any credit, sir. No restriction there. Sir, GSTR 1 is for registration of an unregistered person. Is the same also used for filing return? No, don't get confused. Registration is GST REG 01. GST REG 01 is a registration application. I am talking here about GSTR 1, which is GST return 1. GST REG is GST registration, that is separate. GSTR is a GSTR return, which gives you the details of outward supply. Don't get confused with REG1 and R1. Sir, can balance in SGST in minor head tax under electronic cash ledger be transferred to CGST minor head using PMT09? Yes, PMT09 is a very good facility wherein from one minor head of one major head like the SGST interest can be used. PMT09, you can transfer it to another, say IGST penalty also you can transfer. Permitted, sir. Electronic cash ledger, electronic credit ledger, we are clear. We'll move to electronic liability ledger. Electronic liability ledger nahi hai, electronic liability register. This is covered under 49.7, 49.8 and 49.9 and Rule 85. Electronic liability register reflects the total liability of a taxpayer. Now, whatever is the liability what you declare in your monthly return before offset also is what you will declare there. That liability comes in your electronic liability register. So from there, output minus input net liability will appear there. This input is also from your electronic credit ledger only. So input is what you will not have a separate thing. So only three ledgers are there: liability register, cash ledger, electronic cash ledger, and electronic credit ledger. From the electronic credit ledger, this offset happens. Any amount of tax what is there in your monthly returns will be reflected in your electronic liability register. Any amount of tax, interest, penalty or any other amount as determined by a proper officer in pursuance. So monthly return I filed, sir. Apart from monthly return, you have a proper officer. He's saying that during investigation, search or anything else, he found there is a liability. That also comes in your electronic liability register itself. Now, will you run and pay the amount what is there in search or seizure, or will you pay the amount what is there in the return? That is the next point, which is rules for utilization, rules which will be utilized for the following order for discharging liability of the taxes. Taxes cannot be discharged according to whims and fancies of the officer. It has to be decided by the law. That's the reason section 49(8) says you have to pay self-assessed tax or any other dues related to taxes of the previous periods first. Previous periods, my liability is 1 lakh. This month's liability is 10,000. Sir, I'll pay 10,000 first. Please excuse me. I will pay last month's liability later on. Sorry, not possible. Your return also is not possible that you file. You do not file last month's return and pay this month's return. Not possible. So you have to file last month's returns, pay last month's tax liability, then come to this month, pay this month's tax liability, file this month's returns. Then any other amount payable during adjustment, assessment, or adjudication can be paid, nothing else. So if the officer comes and says, pay this amount first, then pay your tax liabilities under the monthly returns, sir, not possible. Portal is not permitting. I have to pay the taxes of my dues in the monthly returns, then I can pay whatever you are demanding. Okay, so pay that first, then pay this. But you cannot tell this I will not pay because I have to pay my dues under the monthly returns. Monthly returns also has to be paid. Previous month's returns you will pay first. Whatever you have assessed in your monthly returns, you will pay that first. Then taxes for the present month you will pay. Then later on you will pay any assessment or adjudication order, because you cannot say that, okay, assessment order I paid, so my tax liabilities of tax, what I have declared in the returns, I'll pay later. No. Whatever you have declared in the returns, you have to pay first, then whatever comes as an assessment or adjudication. What is the electronic credit ledger? It is like your asset ledger. So in your electronic credit ledger, you will have credits. In your credits, the credit of ECRL, which is your electronic credit ledger, is credit of your input. What you have claimed on a self-assessed basis is your credits. From the credit, you will have the additions. So once the credit comes, your balance increases. It's an addition to your electronic credit ledger. Once the credit comes, then there is a debit. Okay, this credit can be offset with this debit. Multiple questions are coming. Once the credit comes in, you can debit it anytime, no restriction. But there is a time for this credit. What is the time? Taxes on tax invoices for this year, I can claim this year, or up to September of the subsequent year, or filing of annual return, whichever is earlier. This is the credit. Now debit. Debit is payment of all the liabilities of a registered person as per his return. All the liabilities means tax liability only, nothing else. Only the taxes what you are liable to pay, you can debit it. Then, so credit debit ho gaya for electronic credit ledger. Once you debit it, the balance comes down. Electronic cash ledger. Electronic cash ledger is your cash, is your bank account with the portal. You will get the credit in this for payments made through 3 modes. 3 modes are online mode, second is NEFT RTGS mode, and third is the over the counter. Any payments you make, once it gets cleared, once the CIN, Challan Identification Number, is generated, it comes as a credit in your electronic cash ledger. From there, one more credit can come, sir, which is the TDS and TCS. Not relevant, sir. Relevant, sir, because TDS and TCS provisions are not there for your exams, but the credit to your electronic cash ledger is there as a part of your syllabus. TDS and TCS, when somebody deducts it and they give it to you, it comes and credits in your electronic cash ledger. Clear? So credit ledger mein electronic cash credit ledger, you have one inflow. In electronic cash ledger, there is possibility of 2 inflows. Electronic cash ledger, credit has come, you have made the payment, balance is increased. Now how will the balance get reduced? Payment of liabilities as per his return. So whatever is your liability, utilize the credit first. If you don't want to utilize, don't use it. Use it from your cash. That is also possible. Generally what we will do is we will utilize the balance in the credit ledger first, offset it, then use this for any excess payment. Then you can use the electronic cash ledger for other payments also, sir. What are these other payments? These are payments towards TDS, payments towards TCS. Any TDS, TCS which you have to pay under GST law. Don't go tell that I will mix this with income tax. No, sir, not possible. Whatever TDS and TCS you have to pay under the GST law, you will pay from the electronic cash ledger. Any RCM liability, reverse charge liability, you will pay from your electronic cash ledger. Sir, once I pay this, then this comes as a credit in my electronic credit ledger. Yes, it comes, that is clear. Then any amount payable under section 10. What is the section 10, sir? This is a compensation composite supply. Person who is under composite supply, for him credit is not available, so for him this electronic credit ledger will be zero only. There will not be any credit, no debit. So no question of credit, so no question of debit. Any composition taxpayer, he will pay from the electronic cash ledger only. Then any interest, penalty, fees or any other amount is what you will pay from your electronic cash ledger. This is what I meant from other payments. Once these two ledgers are ready, sir, then the debit. Where does this debit go? This debit goes to electronic liability register. What is electronic liability register? This is a liability register. So first you will have liability side addition. What will be debited? Whatever is the amount payable in your monthly returns, interest, late fee as per the return files, any other liabilities will get debited here. How will this debit get offset? It will get offset from my electronic credit ledger, which is the amount debited from my electronic credit ledger and electronic cash ledger. It gets credited and it gets offset. So if this credit gets debited, the debit goes as a credit in my electronic liability register and this gets offset completely. That is how the mechanism works. To understand how a cash ledger looks, I have an example for you. This is how, see, so nicely we have said right side, left side, but practically life doesn't work that way, right side and left side. You have to use that for understanding, but it comes in a proper tabular format. This is the date of my deposit. I have generated a challan. This has come and fallen as a credit for the tax portion. I have paid only tax. This also have integrated. So similarly integrated, then you will have below integrated you IGST, CGST, SGST and cess. This is IGST ledger which will have 5 minor heads. It will have the debit and credits and it will have the balance. Similar to IGST, you will have CGST, central tax. What is the credit? What is the debit? Now let us look at this. On the December 2019, time is also there. Reporting by the bank is also there. Reference number is there, which is the credit of what is my credit. I have deposited. Then in the month of tax period will come here to give a reflection. Once you make the deposit, it will not give you any tax period. You can utilize for anything and everything. Then it will have a debit of whatever taxes you have paid for this month. So November 2019, I have paid for my taxes of this amount. Then I have paid for my taxes of my reverse charge. Why this is coming separately? Because they should know that out of reverse charge you have paid and this will go and fall as a credit in your, is the screen visible? So I'm sharing a PDF of an electronic cash ledger. Yeah, I think just confirm if it is visible now. Is the screen visible? Can you see the PDF? Okay, basically what I wanted to say is appearance of electronic cash ledger appears on a different footing. It doesn't appear like a credit and debit what we have seen. go back to our presentations. Okay. PDF is visible now? Okay. So in our electronic, this is an example of an electronic cash ledger which will have central tax. In central tax, you will have 5 minor heads. Okay. Similarly, you have for integrated tax, you have for CGST, and you have for SGST, and you have for cess. So this will, yeah, it will have the date of deposit, the time of deposit, reporting date, reference number, amount deposit. It will not have any month for which it is there because it comes as a common kitty. Then the debit happens from November 2000. It is for November 2019. So this will show you saying what is the debit over here for which month and what is the debit towards. If it is for other than reverse charge or if it is for reverse charge. If it is reverse charge, then it will be mentioned separately because you can claim the credit of this. What is the amount deposited again? So credit debit happens and the closing balance appear. Okay, so this is how an electronic cash ledger appears. Yeah, electronic liability register is a liability register wherein you will debit the amount payable towards tax, interest, late fees. Basically what you declare in your monthly returns is a liability, right? You have to pay that. That liability comes and sits here. You will offset that from your electronic credit ledger and electronic cash ledger. Now, amount remaining after utilization of this can be claimed as a refund, or there could be a scenario when there is no liability at all, but only credit is accruing here. When does that happen? That happens in two instances. One instance when zero liability happens is in terms of export of services. There are exporters who will only do the export and export is zero rated. So what will they do? Exporters, there is a special provision which says that you can claim refund of the credit lying here. So to the extent credit lying, you can claim a refund of the input tax credit. Another instance is where your credit is more, debit is less. When it is called something called as an inverted duty structure, when your input tax rates are more than your output tax. Only in that situation, like in terms of fabrics and all, in terms of garment industry, I've seen that your credits are more. The percentage is more, but output is only 5%. Okay, in that case, they can claim for the refund of the credit and not otherwise. So only restricted cases, refund claim can be claimed of electronic credit ledger. Electronic cash ledger, there is no restriction because it is your own account. Anybody can claim refund of the electronic cash ledger. Now, this is very important, presumption of passing on the incidence of tax. We have seen 49(1)(2)(8), and now we are seeing subclause for 9. 49(9) says, I'll read the section first. Every person who has paid the tax on goods or services or both under this act, any person who has paid the tax on goods or services or both under this act shall, unless the contrary is proved by him, he shall be deemed to have passed on the full incidence of such tax to the recipient of such goods or services or both. So what does it say is, if I have paid any tax on my sale of goods or the services, then government is assuming that you have passed on that tax to the other person who has paid you. It means I have charged tax on my sale invoice and the recipient has paid the tax to me, and I am not the person who has borne the incidence of tax. So you cannot, this is called as a concept of unjust enrichment. So I cannot tell that, no, sir, I have collected the tax and I have paid it. So if later there is any change in law or for some reason something happens, I cannot go and claim refund. Say today we are on the 3rd of October. On 1st of October, I have made some sale. Today also I made some sale. Okay. Now government says from 1st October, whatever transaction has happened from the 1st October is exempted. Now, if that was exempted and have collected the tax, the incidence is borne by my customer. So my customer is the one who has borne the incidence of the tax. He can go to the department and say, sir, I am the person who has borne this tax, give me refund. If something like this happens, it will not happen that it happens with the the backdated, but if that happens, understand we are trying to understand unjust enrichment. I am the supplier. I cannot go to the department saying, see, this is my invoice, so I have charged the tax, so give me the refund. No. It is always assumed that the customer is the person who has borne the incidence of tax, unless I prove that, no, the customer has not paid to me. I have to prove that. Unless I prove it, it is always assumed the onus of proof, that is the burden of proof, is on the person on the supplier. Otherwise, it is always assumed that the recipient has paid the tax and not the seller, because seller acts like an agent. He collects tax from the customers and then pays to the government. So I cannot say that I have paid the tax from my pocket, give the refund to me. Not possible. Refund has to be claimed by the person who is the recipient, not me. The person who has charged tax on his invoice is presumed to have collected the tax from the recipient, is what this 49.9 says. What are the advantages of the new payment system? This is a theoretical question which you can expect. Payment can be made always 24/7 online, and hence no waiting or standing at the banks for payment. Instant receipts for payments is made available online. If you make online payment, you get the receipts instantly. Tax consultants also can make payment on behalf of the clients, which is the concept of GST practitioners. GST practitioner can make payment on behalf of the clients. Single challan form instead of duplicate or triplicate. Earlier we used to have various duplicate, triplicate copies for payment of taxes under the VAT laws earlier. Now there is no such requirement. Just single challan is sufficient. Revenue comes earlier to the government treasury because the clearance happens faster. There is a greater transparency in payment. Whatever you have paid, it appears to you, and the government also has a control of it because everything is routed online. Online payment made after 8 payment will be credited on the same day. So the timeline is up to 8 p.m. Any payment you make after 8 p.m. will get credited to your account back. So these are the advantage of the new payment system. Now we'll go to section 50, which is the interest provision. When is interest payable? I have collected taxes. I have due date of 20th as the due date for payment of taxes. Now if I don't pay these taxes, then the interest liability triggers. Okay, interest is when I make delay in payment of taxes or delay in filing of returns. Delay on filing of returns and delay in payment of taxes go hand to hand, because unless I pay the taxes, I cannot file the returns. So if I have delayed the returns, it means I have delayed the payment of tax also. Now, interest shall be payable in case where a person fails to pay the tax or any part thereof. Part payment also if I make. Okay, I had a liability of 1 lakh. I paid 50,000 on the 20th. Can I say on the balance 50,000 don't charge me interest? No, not possible. On the balance tax which you have not paid, you have to pay interest on that. But actually part payment is practically not possible, because if you make part payment, then your GST returns doesn't get accepted. So you have to pay the taxes fully. But the provision says for some reason, if you have to pay the tax or any part thereof to the government for the period for which the tax or any part thereof remains unpaid, then there will be interest charge not exceeding 18% as may be notified. So the power given by the law is to charge interest at a maximum rate of 18%, and the government has notified maximum rate only. They will say, okay, we'll notify the maximum rate. So they have notified a rate of 18%. Okay. Now this is the first type of interest. When I make delay in payment of taxes, the interest period starts from the due date after the due date. 20th is the due date. Now I made the payment on 30th. So the interest starts from 21st to 30th, which is I have to pay interest of 18% per annum on the 10 days, not for the full year or not for the full month. Interest, it doesn't give any clarity, but on reading of this, it says that for the part that remains unpaid. So the part remaining unpaid in my example is 10 days. So I have to pay interest for the 10 days period itself from the 21st to 30th at the rate of 18% per annum. Now there is a new provision which says, what is this provision saying is, inserted to provide for charging interest only on the net cash tax liability and not on the gross liability. I have a liability of 1 lakh on my sales. Now I have not filed my returns. Now once I file the returns, I will lodge the credit also. So for the tax liability of 1 lakh, I have a credit of 60,000. So the question came up whether I should pay tax on 1 lakh or I should pay 1 lakh minus 60,000, which is 40,000. So should I pay on the gross liability or on the net liability? That was a very, judicious question which got a lot of people went to the High Court and things like that. That's when they brought in a provision saying that you have to pay tax only after the input tax credit, which is on the 40 rupees. Section 51 in provision is inserted to provide charging interest only on the net tax liability and not on gross tax liability. Because net cash payment, what I make, I will make cash payment of 40 rupees. So interest also is on 40 rupees because the credit is anyways there with the government. I have already paid the taxes to the government through my vendor. So there will not be any interest charge on the 60 rupees, which is the credit available with me. But there is an exception which says, except in case there is any proceedings initiated under section 73 or 74. And return is filed after that. So you have not filed the return, the department has initiated a proceeding under 73 and 74, and then you file a return. Then you cannot tell, no, I have filed the return now, so you give me the credit. Not possible. If your monthly return is due, you have delayed it, that's a regular hardship which is faced, then you can claim the benefit of paying interest on the net tax. But if there is anything under 73 and 74, there is a adjudication which is initiated, then you file the return, then you cannot claim this benefit. But generally, it is on the net tax liability at 18%. There can be other types of interest also. Interest is payable in case where taxable person makes undue or excess claim of credit. Now you are under self-assessment mode. Now nobody comes and checks the credit instantly, right? So you have to claim the credit rightly. But if you have claimed credit wrongly, excess credit you have claimed, or you have reduced your output, okay, that is not permitted, right? That's not what is accepted under the self-assessment regime. Now, if you have done anything of that sort, then the government is saying that is not a regular hardship. That is something more than the regular hardship. So your interest plus 6% you have to take. So 18 plus 6, 24% is what you have to pay in such case. They have not mentioned whether it is by mistake, non-mistake or anything. So even by mistake, if you have claimed more credit, you had to claim a credit of 1 lakh, you have claimed it 10 lakhs, one extra zero you have added. So for the extra 9 lakh rupees, 10 minus 1, the 9 lakh rupees what you have claimed excess, you have to reverse it and pay interest at 24% on that. Okay, so three types of interest comes in. When there is a delay, fails to pay the tax for the period for which the tax remains unpaid. So in your regular monthly returns, you have to pay 18%. The second is you make undue or excess claim of input tax credit. Third is you have reduced excess or you have reduced your output tax liability. That is the third type of thing. For the first type, it is 18%. Second and third type, it is 24% interest. Interest important provisions is clarification received that the interest is payable on net tax and not gross tax. That is clear. Interest is automatic and no discretion is available to the officer. What is 73 and 74, sir? 73 and 74 are adjudication proceedings, sir. Once you have not filed the return, the officer will initiate proceedings against you and you will tell, okay, within 30 days time limit, you file your returns. So subsequent to his order, you're filing your returns. Okay, that's when the return you're filing, otherwise you would not file. So then that's because of the department finding out that you have done this wrongly, not filing of return, they have initiated the proceedings. Then if you file the returns, that is a return which is forced by the officer. That's when you don't get the benefit of paying tax on net. There you will pay tax on the gross liability. Interest is automatic. Officer also cannot reduce it. This is to be calculated from the day when it becomes from the day after when it becomes due till the date of actual payment. In case of belated payment of tax, it should be made voluntarily without any demand. If you're filing your return late, you have to belated return. If you're filing, you have to calculate the interest and pay it voluntarily. In case of any objection or assessment, then interest is payable on final order. Sir, there is a dispute, direct dispute within whether this is taxable supply or non-taxable supply. You are saying it is non-taxable supply. Department is saying it's a taxable supply. You go on appeal. Okay, once you go on appeal and the final order is decided, then interest is payable on the final order amount. Okay, then there is no dispute, and there's a final order is decided. Then you will have to pay on the final order. Interest will be debited from the electronic liability register. As we have seen, electronic liability register, all taxes for as per the return or the assessment also comes and sits in the electronic liability register. Now this payment of interest in the electronic liability register can be made from only electronic cash ledger and not from the electronic credit ledger. Why? Because electronic credit ledger you use only for payment of taxes. Transfer of credit. What is this transfer of credit? Government is saying that we have a system of IGST. Okay, think of IGST as a system of offsetting, because government had to do something for setting of SGST, CGST and IGST. They said, I will explain this with an example. Now you have output of IGST here. Now this output IGST, I said use the input IGST first. Yes sir, I've utilized this. So balance is IGST. IGST is the same thing. This is also to the same government. This is also to the same government. IGST credit is coming to me because somebody else has paid IGST, which again goes to the IGST head itself. So no problem for this. I will utilize this. Then I have IGST payable here. Now this IGST payable, as I said, you can utilize from CGST or SGST in any proportion. Say I have utilized SGST. So this IGST fellow, he is supposed to get, say on the 100 rupees transactions, 100 rupees IGST transactions, 20 was the IGST credit. The balance payable is 80. 100 minus 20, 80 I have to pay. Now this IGST fellow has to get 80. I will tell no, utilize CGST and SGST. If I utilize this, say 20 again here, from the 80, he will get minus 20, he will get only 40. So I will tell, I was supposed to get 80 because of the CGST and SGST fellows, I've got less. The government saying, don't worry, we will transfer the credit. If somebody is utilized the credit, we will do it on a regular basis, that how much our credit is utilized, we will offset this. We will pass on the CGST to the IGST and we will pass on the SGST to the IGST fellow. We will move the credit what is otherwise claimed by a taxpayer. Taxpayer will say, I don't know what the government is doing. The law says, give me the credit, so I have taken the credit. At the back end, you do anything. I don't care. At the back end, this 53 will do all of these things. Back end 53 will tell, okay, this credit which is being utilized for IGST, don't worry. I will transfer this credit, whatever people, taxpayers have reduced, this I will give it to you. This is what is called the transfer of credit. Similarly, SGST and CGST also. CGST, I will reduce CGST. Whatever is balance payable, this fellow can come and rescue. SGST will not come to CGST and say, okay, utilize this credit. Only IGST will come to the rescue. So IGST will come to the rescue here and you will reduce that credit and pay the balance. Similarly, SGST also is a state levy. The state will cry over here saying that I had to get 100 rupees. Why have you utilized the credit? Okay, let the credit utilization happen by the taxpayer. We will transfer whoever is credited, whoever has claimed the credit to that extent, we will transfer it from the IGST and give it to you. That is what section 53 is saying. The credit of IGST utilized for payment of CGST has to be restored. Similarly, the credit of SGST utilized for payment of IGST has to be restored to the IGST. IGST becomes an adjustment to that extent because that is the common credit which gets flowed everywhere, right? Our CGST gets flowed, then IGST gets reduced. Government has access to transfer the credit from CGST to the IGST and vice versa. Therefore, it is very important that when you mention your data in your monthly returns in GST 3B, you have to mention the correct GST TIN. If it is for an unregistered person, we will see in the returns chapter that you will have to give details state-wise. If you don't give state-wise details, then the credit will not flow. This has the relevance in the, everything has a relevance here. That's the reason GSTR1, when we file returns, then you will ask, sir, then if I give to unregistered persons, why do you have to mention the state? Because of this, because the credit of one state has to get transferred to the IGST, or IGST needs to get transferred to the state that has to be looked in for settlement purposes. So that is transfer of credit. We had another section called 53A, which I didn't touch upon here. 53A says, I said about PMT07, right? PMT07 is movement from CGST to SGST is possible. Now, when CGST to SGST is possible, it says it will be treated that you have claimed. 53A says once you're transferred from CGST to SGST, it is treated that you have claimed a refund of CGST, and in the SGST there is a deposit. That is what it says, transfer of other credits. That once it is permitted to move the credit from one head to another head, right? Then it is treated that this head you have claimed the refund and the other head you have deposited the tax. Now there are amendments which are relevant for you. Earlier, OIDAR also have to pay, NRTP, all those people, everybody has to pay. But online information database access retrieval services are specialized services. A person who provides outside India to any person who is not registered in India have to pay this taxes on OIDAR. Okay. Now, earlier there was a provision saying that this OIDAR person is not in India, so he can pay taxes from another mechanism called as electronic accounting system in excise and service tax. Now, this has been removed. Electronic accounting system in excise and service tax is not an option. They will have to pay the taxes through the normal modes what we had discussed itself. That is the first amendment. Second, in 86, new sub rule A is inserted, which says that when a registered person has claimed refund of any amount paid as wrongly paid tax. So I have wrongly paid tax and I have claimed refund, or I have paid excess tax and I am claiming refund. Now, if I am claiming refund of a credit, then government said, okay, you have claimed a refund, I'll pay you by cash. So the credit amount of refund claimed in the electronic credit ledger got converted into cash ledger, because otherwise I could not have utilized, right? Electronic credit ledger, if I paid anything wrongly, or some of my vendor has paid wrongly and I have to claim refund, then I will debit the electronic credit ledger. Then the government used to give me cash. But now the government is saying, if you have claimed refund by debiting in your electronic credit ledger, then if the refund is sanctioned, then it will be recredited to your electronic credit ledger only, and it will not be given to you in cash. This is applicable only when it is tax wrongly paid or paid in excess. It doesn't apply to other refund case when we were talking about export of service, because export of service is not tax wrongly paid. So they will still get the refund of the balance in the electronic credit ledger through their bank account only, right? So a registered person who has claimed refund of any tax paid as tax wrongly paid or paid in excess for which debit has been made from the electronic credit ledger, the said amount, if found admissible, shall be credited to the electronic credit ledger only and not other thing. So refund for exports still remains the same. Don't get mixed away with this, saying that how can I when I claim refund, I debit my electronic credit ledger. So refund also has to come to my electronic credit ledger. Doesn't make sense. So if that comes to the credit ledger only, then why will I go for refund? So for them, it is still that the refund will come in their bank account. But if there is any tax wrongly paid or paid in excess, that is when this says that the refund will be credited to your electronic credit ledger. So this is what covers the chapter of payment. We have covered everything in this, but you have to be careful that this has to be read with the chapter of input tax credit, especially, so that you know what input tax credit is available, claimable, eligible, ineligible, and the provision of returns, because returns and payments go hand in hand. Thank you very much for your patient hearing, and thanks for all your questions. One question is, Rule 86 is PMT 095. Yeah, I'll go back to the first slide wherein we have mentioned the rules. Rule 85 is Electronic Liability Ledger. Rule 86 is electronic credit ledger. Rule 87 is electronic cash ledger. PMT09 is given through a separate rule. MCQ, are you referring to MCQ? What is there in your study material? Somebody asking MCQ, please, sir. Can you please elaborate your question so that I can address that now itself? What do you mean by MCQ, multi-choice questions? Do you want me to take up the multi-choice questions, what is there in a study material? Fine, there's no clarity. So multi-choice questions are there in a study material and they're self-explanatory. Once you have understood these concepts, I think MCQs in the thing also are easy to understand. Thank you very much. We'll meet again on Monday for chapter on returns. Thank you.